know how these contracts work. All that 40 years for 5 years for 200 million.
Follow @TuneIn on Facebook, Twitter, and Instagram to hear more sports.
And never have time for tears. Why slice a single apple wedge when you can wedge it all in one snap? NutriChopper comes with the razor-sharp interchangeable stainless steel blades you need to make all of the cuts you want, and all incredibly quick. Chop thick slices, chop thin slices, chop cubes, chop sticks, and wedge whole fruits and vegetables in just 1 second. Slice it and cook it right in the pan, right on your stove. Chop and slice right into the pot for a family-sized stew with no mess. Snap and slice a fruit salad for the kids right into the bowl in seconds. Slice up a healthy salad for a quick and easy meal on the go. Cube meats and cheeses quick, in a snap. And NutriChopper comes with a perfect portion container and fresh-keeping lid so you can slice it, seal it, and store it all in one. To clean, simply rinse or rack it in the dishwasher. Then lock it to store it safely in a drawer. And now the NutriChopper with the thin slice, thick slice, wedge, and cube blades, and the slice and store container and lid, a value of over $40, is yours for just $19.99. But wait, order now and we'll even pay the shipping for you. You get the complete NutriChopper set with blades and container with lids, all for just $19.99 with free shipping. Here's how to order.
To order, call 1-800-257-9942 or go online at NutriChopper.com. That's 1-800-257-9942 or go to NutriChopper.com. Order now.
Do you worry about going to the dentist? Well, relax. The Carefree Dental Card is now available in your area. Call the number on your screen and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. The Carefree Dental Card is just $15.95 a month. So call now and make going to the dentist carefree.
Call 1-800-478-0809 to receive your free Carefree Dental Card information kit.
Life Room by Four Seasons, where outdoor living meets future technology. No matter your style or budget, Four Seasons has got you covered. Simple shade from the sun? Covered. Outdoor dining in style? Covered. Need additional living space? Oh yeah, that too. Call today and arrange your free design consultation. Four Seasons, we've got you covered.
Shark Tank, tonight starting at 8 Eastern. CNBC, get yours.
good at what he does. But
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
Are you curious what others are listening to on TuneIn? Head to the trending section under Browse to see the most popular stations and podcasts among TuneIn listeners right now. Check it out. You might just discover something new for yourself.
For drug-free sinus and allergy relief, experience Navage.
This time of year, I get so stuffed up, but Navage flushes my sinuses so I can breathe again.
Navage uses powered suction to flush out allergens, germs, mucus, and dirt.
My doctor recommends Navage to breathe better through my nose, and it works. Congestion's gone, and I feel great.
And Navage is so much easier than a neti pot.
Trusted by happy noses everywhere, Navage is nature's decongestant. Online and at these fine retailers.
Day 1, 50 Peloton rides off the year. Here we go.
Don't stop here, Peloton. Remember why you started.
Halfway there, just hit a 5-day streak.
What's that mean?
Means Daddy didn't quit.
I don't get it.
Almost 50 rides. Boom!
We did not wake up to be mediocre today, Peloton.
Okay, just another meeting.
Come on. You didn't wake up to be mediocre.
A lot of folks ask me why their dishwasher doesn't get everything clean. I tell them, it may be your detergent. That's why more dishwasher brands recommend Cascade Platinum, with the soaking, scrubbing, and rinsing built right in. For sparkling clean dishes the first time. Cascade Platinum.
Are you stuck with a low credit score causing you to be denied credit? Then do what Terrence did and go to creditrepair.com.
I started thinking about buying a new house, and my score wasn't where I needed it to be.
Don't let a low credit score hold you back.
Knowing that somebody's working for me and fixing my credit and allowing me to still be free to do what I need to do is actually a time saver.
Don't wait. Visit creditrepair.com to see how you can get started with a free credit evaluation and game plan.
Selling on Poshmark is crazy simple. All you have to do is post a picture, add a description, add a price, and you're pretty much good to go. Right now I'm selling Air Jordans and Nikes and Adidas, anything really performance related or style related.
Download the free Poshmark app now.
Hey Frank, our workers' comp insurance is expiring. Should we just renew it?
Yeah, sure. Hey there, small business owner. Pi Insurance here with some sweet advice to stop you from overpaying on workers' comp. Try Pi instead and save up to 30%.
30%? Really?
Get a quote in 3 minutes at easyaspi.com.
Wow, that is easy.
So, need another reminder?
No, I'm good.
Yes, please.
Oh, yeah. Need workers' comp insurance? Get a quote in 3 minutes at easyaspi.com.
Did you know TuneIn doesn't just live here on your smart speaker? From the audio that moves you to the audio that gets you moving, soundtrack your every movement with the free TuneIn app. Available on your phone or tablet. Download TuneIn on the App Store today.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip
Follow
Bayless.
and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
It's also smart to prepare for power outages that can leave you in the dark. You need a solution that will help you save money, prepare for power outages, and help the environment. Introducing the Generac Power Cell, a battery storage system that harnesses the power from the sun to help reduce your electric bill and provide backup power during utility power outages.
With the battery storage solution, we're saving about $450 a month.
PowerCell's revolutionary technology captures and stores electricity either from solar panels or the electrical grid. It allows you to use stored energy during peak demand times when electricity costs are high, which helps reduce your electric bill, saving you money. And when a power outage occurs, PowerCell is ready to supply backup power to your home. PowerCell's modular design allows for easy customization for any home or budget. And PowerCell is backed with a 10-year limited warranty.
It was a simple installation, very neatly installed. It was done very quickly and efficiently. Since installing our power system, we've been experiencing a savings of $1,500 a year.
Generac has been a trusted provider of backup power solutions since 1959 and provides 24/7 customer support.
The battery storage solution in combination with the solar has been one of the best investments we've ever made.
Special financing is available with low monthly payment options. You will likely qualify for tax credits and energy rebates, which could save you up to 30%, adding to the savings you'll enjoy over time with PowerCell. Call now to schedule a free in-home assessment. The call is free, the assessment is free, and there's no obligation to buy. Act now to receive PowerView, Generac's home energy monitoring system, a $300 value. With PowerView, easily keep tabs on your energy consumption, monitor your battery usage, and track your savings. Don't wait. Call or go online now. PowerCell. Savings powered by the sun.
We are the dreamers. We come in a variety of colors
and styles,
a variety of sizes.
We come in different patterns
and different materials.
We are the dreamers.
Achieving your dream can take work.
I just wanted to do a career.
But don't give up.
Changing my life.
Don't ever give up.
Ignore the haters.
They didn't believe that I can do it, and I just proved them that I can.
Independence University.
IU is an online college.
Education online for a better life offline.
So your campus is wherever you want it to be.
Take classes when you want to take classes.
At IU, you receive the tools you need at no extra cost.
Even a brand new laptop and tablet to use in school.
You're going to keep that laptop and tablet when you graduate.
And IU's career services work really hard to help you get a job.
You've got to have dreams. Independence University.
Education online for a better life offline.
1-800-967-1179. 1-800-967-1179.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
Get yours.
What would this chair retail for?
That's a $1,700 chair.
This is my favorite episode, I think. Seems like, what did we sign up for?
Yeah, I know.
The Profit, an inside look. All new Tuesday, 10 Eastern. CNBC. Get yours.
I use Poshmark to sell all the clothes that I haven't worn in months. I can just hop on the app, take a few pictures, put it up, and start selling in minutes. It feels amazing to have a ton less clutter in my closet and make a little extra money on the side.
Download the free Poshmark app now.
For drug-free sinus and allergy relief, experience Navage.
This time of year, I get so stuffed up, but Navage flushes my sinuses so I can breathe again.
Navage uses powered suction to flush out allergens, germs, mucus, and dirt.
My doctor recommends Navage to breathe better through my nose, and it works. Congestion's gone, and I feel great.
And Navage is so much easier than a neti pot.
Trusted by happy noses everywhere, Navage is nature's decongestant. Online and at these fine retailers.
Day 1, 50 Peloton rides to start the year. Here we go.
Halfway there, just hit a 5-day streak.
We did not wake up to be mediocre today, Peloton.
It's just another meeting.
Come on, you didn't wake up to be mediocre.
This is an important message. If you walk with a traditional cane, you could be causing crippling pain. Researchers have discovered that traditional canes force you to walk hunched over, head down, and unstable, which creates debilitating back, neck, and joint pain. Take your next step upright, secure, and with less pain with the Campbell Posture Cane, the ingenious walking cane that allows you to walk more upright, changing your line of sight so you look forward instead of down. You'll be perfectly balanced, safe, secure, and more comfortable when you walk.
With the Campbell Posture Cane, I've got more confidence and I see everything around me, and I love it.
I feel that it gives me more support, and I don't have to worry about falling.
The secret is in the revolutionary Campbell handle that takes the pressure off your shoulder and wrist, placing you in a natural, upright, pain-free position. And the Campbell Posture Cane comes with this 360-degree traction tip that stands next to you. Plus, it helps you easily get up and out of chairs and safely navigate sidewalks and stairs.
The Campbell Posture Cane works by supporting the strength of your body using biomechanical engineering to dramatically improve your posture, help you move easier, and feel less pain.
And the Campbell Posture Cane comes with 12 different height adjustments to customize the fit. Plus, it's lightweight and sturdy, making it easy to carry with you.
The Campbell Posture Cane has given me my freedom back.
During this special TV introduction, you can get your Campbell Posture Cane with the revolutionary Campbell handle and stand-up stability tip for the factory direct price of just $39.99. But to make this the most stand-up offer on TV, it comes with the Campbell Gold Medallion money-back guarantee. Call or go online to CampbellCane.com. That's CampbellCane.com. That's CampbellCane.com.
Call 1-800-878-4810. Again, that's 1-800-878-4810 or go online to CampbellCane.com. Order now.
What you're listening to? Want to make getting back to it easier? Use the favorite button to keep track of the stations and podcasts you love on TuneIn. Just tap or click the heart icon to add it to your favorites. Then find all your go-to audio under the Favorites tab. Pretty easy, right?
See, get yours.
Power outages can be unpredictable, inconvenient, and disruptive to your life, posing a real threat to your comfort and safety. When the power goes out, you have no lights, no refrigeration, no heating or air conditioning. Your well or sump pump won't work. Your modern daily electronics are rendered useless. And what if the power's out for days or weeks? Are you prepared? You can be with a Generac home standby generator.
24 days we were without power. I had water, I had ice, I had coffee, I had air conditioning. I was able to stay here because of Generac.
When an outage occurs, your Generac home standby generator automatically powers up, so your life goes on without disruption. You and your family are comfortable, safe, and secure. Generac generators run on your home's existing natural gas or propane. And Generac's standard Mobile Link remote monitoring system keeps you posted on operating status, maintenance updates, and more. Generac generators are designed, engineered, and purpose-built in the USA. Generac is the #1 manufacturer of home standby generators in the world. 8 out of 10 home generators are Generac, with thousands of satisfied customers.
Very good product. Very, very good reviews from everybody.
Prices start at just $19.99, and special financing is available with surprisingly affordable monthly payments. Call now to schedule your free in-home assessment with one of Generac's 6,000 nationwide dealers. The call is free, the assessment is free, and there's no obligation to buy. Plus, if you act now, you'll receive a 7-year extended warranty absolutely free. That's a $695 value. Call now, so the next time there's a power outage, your home powers up. Power your life with Generac. Call or go online to schedule your free in-home assessment today.
Do you worry about going to the dentist? Well, relax. The Carefree Dental Card is now available in your area. Call the number on your screen and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. The Carefree Dental Card is just $15.95 a month. So call now and make going to the dentist carefree.
Call 1-800-478-0809
With the Carefree Dental
to receive
Card,
your
you go to
free
the dentist
Carefree
whenever
Dental
you
Card
need and you
information kit.
instantly pay a lot less. The Carefree Dental Card is just $15.95 a month.
Life Room
so
by
call
Four
now
Seasons,
and
where
make going
outdoor
to the
living
dentist
meets future
carefree.
technology.
Call 1-800-478-0809
No matter your style or budget, Four Seasons has got you covered. Simple shade from the sun,
The Carefree Dental Card
covered.
is just
Outdoor dining in style, covered.
outdoor living meets future technology.
Need additional living space?
No matter your style
Oh yeah, that too.
Four Seasons has
Call today and arrange your free design consultation. Four Seasons, we've got you covered.
The Deep Chicago, all
Outdoor
new
dining
Wednesdays,
inside.
10 Eastern. CNBC. Get your
Right before this happened, I quit a full-time job.
And I cash out my 401k.
I put this together on my own.
I'm the person who made it.
Shark Tank, tonight starting at 8 Eastern. CNBC, get yours. The Deep, Chicago, all new Wednesdays 10 Eastern. CNBC, get yours.
Breaking news, a global sell-off underway as the 11-year bull market comes to an end. Stock futures pointing to heavy selling at the open. This as President Trump takes unprecedented action to help stem the spread of the coronavirus in the U.S.
We will be suspending all travel from Europe to the United States for the next 30 days. The new rules will go into effect Friday at midnight.
And the NBA suspending its season after a player tests positive for the coronavirus. The fallout and much more coming up. It's Thursday, March 12th, 2020, and Worldwide Exchange begins right now.
This is CNBC Breaking News. Market sell-off.
Good morning. I'm Courtney Reagan, live at the NASDAQ market site in Times Square this morning. We begin Thursday morning with some breaking news. A stock future set to extend yesterday's sell-off, which, by the way, officially marked the end of the Dow's 11-year bull run. Take a look at futures right now. Dow Jones Industrial Average indicated lower by more than 1,100 points. S&P 500 down by 130 and the NASDAQ off by 382 points. Again, testing these limit down numbers where we will have a mechanism in place to prevent us from falling further, at least for the futures market. Yesterday, though, the Dow lost 1,400 points, its second biggest point loss ever, to close in bear market territory, down more than 20% from its recent 52-week high. The S&P 500 hovering just above bear market levels. If the S&P hits 2709, it will be the fastest 20% drop for the index on record, and we are set to hit that level at the open. The 10-year yield continues to trade below 1%. On the 10-year yield right now, we are at 0.739%. The 30-year above 1, but at 1.2%. And oil falling again this morning. Crude oil is now hovering right around $31, 31.37, but that's down almost 5%. And it's really not just red in the U.S. It's red across the board, all around the world. The screen in Asia, in Europe, precipitously lower. You see the Japanese Nikkei off by more than 1%. FTSE 100 down by 5.5%. And the German Xetra off by more than 6.5%. And all of this as President Trump announced he is suspending travel to and from Europe for the next 30 days in an effort to stem the spread of the coronavirus to U.S. shores. Worldwide Exchange does have your global team coverage following all the action this morning. Matt Taylor is in Singapore. We have Karen So in London, Tracy Potts standing by in Washington, and Avalon Investments and Advisories Bill Stone is in Houston with some market insight. Matt, we're going to start with you.
Hi there, Courtney. A sharply weaker day right across the Asian session. We're talking 3, 4, 5, 6, even 7% in some cases to the downside. Now, the China market's holding up the best, but we were still down by about 1.5% on the Shanghai market after the close. China's health commission saying that the country has passed the peak when it comes to coronavirus cases. The Hong Kong market closing down 3.6%, its lowest level in 3 years. India still trading, now down by more than 8%. Japan was down by more than 5% at its low point of the day, ending down by 4.4%. South Korea off by about 3.8%. Japan back in bear market territory and the lowest level for that market since April of 2017. The Australian market, though, it was the worst performer, with the exception of India, which is still trading, closing down 7.4%, well and truly in bear market territory. We're now off some 26% since the recent high of just last month. We've got a big fiscal stimulus package out of the government there, 17.6 billion Australian dollars. That's around 11.4 billion US dollars, much of that in cash handouts to low and middle income earners, but the market reacting negatively of 421 points. You were talking about the travel ban. We did see an adverse reaction across a number of the travel stocks regionally today. Here are just a few of them. Cathay Pacific, of course, the airline based in Hong Kong, down by 4%. Japan Airlines down by 7%. In Australia, Qantas down 10%. And Virgin Australia 17% to the downside. Courtney, back to you.
Matt, thank you very much. Karen Cho joins us now from London with the early trade in Europe. Good morning, Karen.
Courtney, good morning. European investors somewhat flat-footed yesterday. Not going to be caught out today, though. Consider these benchmark down less than 1%, despite those vicious selling moves that you saw on Wall Street yesterday. So somewhat of a catch-up trade, but also anticipating futures ahead today. The travel ban, the 30-day ban between travel between the US and Europe, having a huge impact here, 6.4% lower. Keep in mind, we're also keeping an eye on the ECB today. Monetary measures expected, perhaps another move on that deposit rate, which is already at minus 0.5%. Also liquidity measures. So that should help sentiment. It is simply not at this point. Take a look at the indices. You can see how it's falling across the board, 5.6% off the UK stock market. That was a market that we watched yesterday falling just 1.4% as we saw measures from the Bank of England and also UK Treasury. The French market, DAX trading lower. Airlines, just a quick look at some of those. They also have some relevance at this point, given what we're seeing with those travel bans. 10% off the owner of British Airways. Back to you, Courtney.
Wow, Air France, they're down 14%. Thank you very much, Karen. We're going to now get over to NBC's Tracy Potts. She's standing by in Washington, where just hours ago, President Trump announced the unprecedented action of suspending all travel to and from Europe for 30 days, among several other measures. Hi, Tracy.
Hi there, Courtney. Good morning, everyone. So there are exceptions, but the president says this is what's necessary at this time for the next month in order to prevent this virus from spreading into the United States even further. And that travel ban goes into effect tomorrow.
My fellow Americans,
to keep the coronavirus from spreading, President Trump canceled his trip to Nevada and Colorado and announced that the U.S. is shutting down all travel, people and cargo from Europe except the UK.
These restrictions will be adjusted subject to conditions on the ground. There will be exemptions for Americans who have undergone appropriate screenings.
He'll defer tax payments and ask Congress to cut payroll taxes and add $50 billion for small business loans. Today, a House vote on measures Democrats call family-focused, paid sick leave, free testing, unemployment insurance, and food assistance.
Seniors are going to be hungry. Children are going to be hungry. That's what we're trying to take care of.
Government health experts say this is just the beginning.
Is the worst yet to come, Dr. Fauci?
Yes, it is.
We are on the front lines. In California, nurses complain hospitals are not ready for an influx of patients.
We have a finite number of ICU beds and a finite number of ventilators, and there's only so much we can do.
More than 100 colleges are sending students home for an extended spring break.
What are you taking with you?
Everything. Holding classes online and heeding advice to avoid large crowds, a first in the sports world. March Madness with no fans, and the NBA is suspending the rest of the season after a Utah Jazz player tested positive.
And then back here on Capitol Hill, we actually have our first confirmed case of coronavirus here on the Hill. A staff member of Washington Senator Maria Cantwell has been isolated, and now that D.C. office is being shut down for a week, and colleagues are being tested, Courtney.
Wow, Tracy, there's a lot going on here. Now I understand some areas are doing their own testing, but without the CDC. What's going on with that?
Right. So there's been that bottleneck, that backlog of test kits getting out to the United States. So some areas, some hospitals, some institutions have been approved to do their own tests. They have their own tests. But you will still find sporadic areas where they say they can't get their hands on tests. And that is a big concern because health experts say they don't believe we're testing nearly as many people as we should be at this point.
Absolutely. That concern is a big one. Tracy Potts, thank you very much for joining us this morning. Well, taking another look at futures in the wake of President Trump's speech last night, a sharp sell-off indicated here when the opening bell sounds. Right now, the futures are indicated for the Dow to open lower to the tune of almost 1,200 points. The S&P 500 indicated lower by 135, almost 136 points, and the Nasdaq off by 393 points. Joining me now is Bill Stone. He's Avalon Investments and Advisory's Chief Investment Officer. Bill, good morning. You know, this is gearing up to be another very rough day if you're bullish, and most investors probably don't take comfort in seeing these big sell-offs. What's your message to an investor that's waking up to see yet another sell-off today?
Yeah, I mean, and you talked about it earlier. The rapid nature of the sell-off has made it, probably more disturbing than many that we've seen, and the left with the unknowns. I think what I try and talk about is, these kind of times make you zone in on the short term so much. And I think you have to look at history and think about the long term as to how this likely plays out. We know in the short term, all the things you've talked about already, which is it's likely to get worse in terms of the virus, et cetera, business disruption. But the long term is what you've seen in these kind of, similar situations, never exactly the same, is that once you get through, you do end up seeing a sharp rebound in activity. So as we think about companies, we look for, the normalized earnings and where are we getting opportunities. And I think that's what investors should look for. Secondly, you do have to think about there will be companies that, may not make it through the downturn because we don't know how long it's going to last. So that's the other thing you really need to watch for. And I think that's part of what's going on. And you throw in the oil on top of it. And that also for the energy sector anyway is certainly part of the picture.
So that's a number of things there that we could dive a little deeper on. I want to start first with your comment about history. Certainly we've had downturns before, but have we really had a downturn that was spurred by what is now being classified as a pandemic? I mean, is this the same as what we've seen in the past? How much can history really be a guide here?
Yeah, no, it's never exactly the same, but I think when you look at, whether it's natural disasters, because this kind of falls under the natural disaster, some of that's easier is a hard thing to say. You don't want to say it that way. Some of it is the timing. It moves through quicker. We don't know how long this lasts. That's what makes it different. But anyway, you look at it, once you get through this, again, we typically have seen with any of these epidemics that you do see economic activity pick up. Hopefully, again, we've gotten ahead of it. Part of the what you think about is that you're trying to slow it down. You can't stop it, but you try and slow it down so it doesn't overwhelm the healthcare system. Things, again, you've been talking about is the worries. But again, you take all those precautions to try and make sure you don't get to that point.
So I think most of us do feel at some point there will be an end to this. We don't know when. We don't know when the market will bottom. But if you are an investor, is it best to just wait until you see a little bit more stabilization? Or should you have a strong stomach and put some money to work here if you can hold tight for a longer period of time?
Yeah, and I think that's the key, right? If you can hold tight through it, slowly moving some money in, again, using history as a guide, it's rarely been a bad move once you're down into bear market territory. Again, you have to think back to the financial crisis, 2000, the 1970s. Other than that, there aren't many times when once you get down 20% that you haven't been up in a year's time. So, again, it takes a strong stomach. And certainly you've got to make sure you're set to be able to personally to make it through this sort of, disruption if your job's in jeopardy, et cetera. And certainly those are things you have to think about as they hold that rainy day fund, but yet, rebalance. If you had high quality bonds, obviously they're up a lot during this period. So you have an opportunity to rebalance a little bit.
Bill Stone, thank you so much for being here with us. Stay healthy and save yourself. Well, when we come back, details on the actions the NBA is taking after one of its players tests positive for the coronavirus. Plus, tightening its grip, the Italian government instituting new restrictions to strengthen its nationwide lockdown. We go to Rome in a moment. But first, 69% of S&P 500 stocks are trading in bear market territory, down 20% or more from recent highs. Names like CVS, Nike, Comcast, Alphabet, Goldman Sachs, and more. Worldwide Exchange is back after this.
A lot of people aren't aware that TuneIn lets you listen to the same terrestrial stations that you pick up on your FM AM dial, except you can hear them from anywhere. To see all the stations broadcasting in your area, find the local radio section on the home screen. Keep it local with TuneIn.
The Maharani of your world, and it can be all designed around you. All the beauty is yours. All the music is yours. India showed me that luxury doesn't follow designers and brands. True luxury follows its own heart.
Incredible India.
I wish that I knew what I know now. When I was younger.
Don't just plan to retire, plan to live. An annuity helps cover your essential monthly expenses, so you're free to live the life you want. Find out how an annuity can give you lifetime income at protectedincome.org.
On the next Squawk Box, coronavirus impact, economic fallout, where investors are finding safe havens from the market's wild swings. Squawk Box, 6 a.m. Eastern today. Watch and listen live on the CNBC app.
Government should be offering no-interest loans to small businesses that won't be able to handle the downturn. They didn't do anything wrong. We should subsidize companies that give their employees paid sick leave because it's very hard to quarantine yourself if you're living paycheck to paycheck. Watch or listen live on the CNBC app.
Life Room by Four Seasons, where outdoor living meets future technology. No matter your style or budget, Four Seasons has got you covered. Simple shade from the sun? Covered. Outdoor dining in style? Covered. Need additional living space? Oh yeah, that too. Call today and arrange your free design consultation. Four Seasons, we've got you covered.
We are the dreamers.
We changed the world.
Because we don't give up.
IU can help you live your dream.
IU is an online college, so your campus is wherever you want it to be.
Take classes when you want to take classes.
You receive the tools you need at no extra cost.
Even a brand new laptop and tablet to use in school.
Call IU, then tell them your dream.
1-800-967-1179. 1-800-967-1179.
Welcome back. The coronavirus outbreak has reached pandemic levels, according to the World Health Organization, with more than 125,000 cases confirmed globally. Frank Holland is back at CNBC headquarters with the latest. Good morning, Frank.
Hey, good morning to you, Courtney. Well, amid the ongoing global coronavirus outbreak, China's airlines lost an estimated $3 billion last month. That's according to the country's regulators. They say the number of air passengers fell by nearly 85% from a year ago to 8.3 million people. The first 2 months of the year are normally the busiest time for travel in China as workers return home for the Lunar New Year. And the CME Group has announced it's closing its Chicago trading floor as a precaution to the growing virus outbreak. In a statement, the CME said the move will take effect Friday at the close of business and added no cases have been reported. This makes the CME the first major U.S. exchange to close a trading floor due to concerns over coronavirus. And now to the sporting world. The NBA has announced it's suspending its season indefinitely. The league making the move after a preliminary test found coronavirus in a Utah Jazz player who had been sick. Those results came shortly before the Jazz were set to face off against the Oklahoma City Thunder, forcing the cancellation of that game. That's the very latest. Now over to you, Courtney.
Frank, thank you very much. We're going to go to Italy now, where the country is tightening its countrywide quarantine, also raising its death toll count from the virus to 827, with more than 12,000 confirmed cases. NBC's Claudio Lavanga is in Rome with the latest.
Good morning, Courtney. Well, if you thought that telling 60 million Italians to stay at home unless they have a real emergency was a big ask already, well, think again, because starting today, the government is locking down all shops, all businesses. I'm talking about shops, shopping centers, hairdressers, pubs, restaurants, bars. The list, of course, is very long. Only grocery stores and pharmacies will remain open to allow Italians to shop for basic necessities, at least for the time being. Last night, during yet another dramatic press conference, Prime Minister of this country, Giuseppe Conte, warned Italians not to expect to see the benefits of these lockdown rules overnight, but to wait at least 2 weeks to see a slowdown in the number of people who are testing positive in this country. So if you think that until yesterday, until Wednesday, Italy was in some sort of partial lockdown, well, from today, this country is in total lockdown. Courtney?
Claudio, thank you very much. The Italian index is down 5.6% at this point as Europe continues to sell off. Just one day after warning of a financial crisis-like slowdown from the coronavirus if central banks fail to act, the ECB's Christine Lagarde is set to take the podium once again. A live report from outside the ECB in Frankfurt is coming up next. But first, a check on the S&P stocks getting hit the hardest, at least in the pre-market. Norwegian Cruise Line shares down 14%, as is American Airlines. Delta Airlines off by more than 11%. Worldwide Exchange is back after this.
Dana-Farber Cancer Institute.
Discovered the PD-L1 pathway.
PD-L1.
They change how the world fights cancer.
Blocking the PD-L1 protein
Lets the immune system attack
cancer.
PD-L1 transformed.
Revolutionize.
Immunotherapy.
PD-L1 saved my life.
Saved my life.
Saved my life.
What we do here at Dana-Farber changes lives
Everywhere.
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 At today's Best Western, stay 2 nights and get a free night for your next stay. 1 night, 2 nights, free night. Book now at bestwestern.com.
Do you have concerns about mild memory loss related to aging? Prevagen is the #1 pharmacist-recommended memory support brand. You can find it in the vitamin aisle in stores everywhere. Prevagen, healthier brain, better life.
Hiring is challenging, especially for a pivotal role.
It definitely felt like we were looking for a needle in a haystack.
So Dylan used ZipRecruiter. He posted his job, ZipRecruiter sent it to over 100 top job sites, and then matched his job with qualified candidates.
We were very impressed with how quickly we had quality candidates apply through ZipRecruiter. It's very important that we choose the right people, and ZipRecruiter's been able to help us do that.
ZipRecruiter, the smartest way to hire. Try it for free at ZipRecruiter.com/theprofit.
Musculoskeletal conditions represent 16% of the cost of healthcare for a large employer.
People are either absent or they are present, but they're not performing to their potential.
By treating musculoskeletal disease more effectively, the gains to an employer are quite large.
Our goal is to provide the most efficient care by giving a patient the correct diagnosis, the correct intervention with the least complications. We think that's the most efficient way to deliver care.
I found a place in my heart. I found a light in the dark. I found my heaven.
The Range Rover Evoque. The only adventure sales event is happening now.
Welcome back. We are just hours away from the ECB's latest policy decision due out at 8:45 a.m. Eastern time today. Let's turn now to our Annette Weisbach. She is outside the ECB headquarters in Frankfurt.
Yes, thank you so much. We're expecting a rate cut by 10 basis points today by the ECB. We're expecting ample liquidity measures to the banks, but also to the small and medium-sized enterprise sector here in the Eurozone, because it makes up such a bulk of the economy and it's already feeling the brunt of the crisis. And on top of that, we're expecting more generous terms for the tiering system, so to take the pain away from the ailing lenders in the Eurozone to actually still lend to the real economy. So all in all, Christine Lagarde has a very difficult situation because there are members in the Governing Council which are against upping quantitative easing here in the Eurozone, but I guess there's no way around it. Inflation expectations are close to record lows, if not at record lows. At the same time, the euro exchange rate, trade rated towards the US dollar, is spiking, and that is the situation currently here in the Eurozone, which is not exactly positive. And we don't know how the crisis is actually affecting the economy. What we know, it will be substantial.
And Annette, when you look at the different economies in Europe, obviously they are connected but also separate in a number of ways. Right there where you are in Germany, what is the status with the coronavirus and how it's impacting the broader economy and business operation?
Well, actually, business travel came to a standstill all across the Eurozone. If you talk to business people, they are no longer traveling. The cities are empty. We just heard from Angela Merkel, the German chancellor, of course, as of yesterday, that she's expecting 60 to 70% in Germany to actually get the coronavirus. So I guess what we see in Italy is just the beginning, and that will spread to other countries as well, such as Germany and most likely also France, etc. We can't just hinder it. I think what politicians are now trying to do is to slow the infection down, or the infection rate down, because the health system is the big problem, that the health system might actually not have the capacities to deal with all these people getting the coronavirus. Back to you, Courtney.
Annette, thank you very much for bringing us the latest from the ECB. Well, straight ahead, we are going back to Washington, where just hours ago, President Trump took to prime time to address the crisis and lay out unprecedented steps to stem the spread of the virus.
This is not a financial crisis. This is just a temporary moment of time that we will overcome together as a nation and as a world.
Plus, the outbreak hits Hollywood as one of its biggest stars confirms he's been infected with the virus. And taking a look at airline stocks in the wake of President Trump's speech, they are down sharply. American down by 13%, Delta Airlines off by 11%, United down by 11% as well. Worldwide exchange continues in just a moment.
We have like 40 years of data. That's incredibly valuable.
I don't know.
When do we introduce Sriracha?
Not soon enough.
Exactly. These are our sales, by product, by region, set against evolving demographics. You can actually see taste trends.
Since when can we do that?
Since we started working with BDO.
People who know BDO.
Doing the things we love can be painful. Aspercream works to relieve those aches and pains. Aspercream's triple effect provides targeted relief, works in minutes, lasts for hours, so you can keep doing what you love. Love hurts. Aspercream works.
The virus pandemic, the market sell-off. How can you position your portfolio for protection? Squawk on the Street, 9 a.m. Eastern on CNBC. Watch or listen live on the CNBC app.
Read. Read yourself past the gossip mags, past the agendas, the bias, the partisan pandering. Read yourself better.
It's time for a special announcement from Four Seasons Sunrooms and Windows. Transform your home and change your life with a Four Seasons sunroom. And watch this announcement until the very end for a special code for exclusive additional savings. And now it's time for Four Seasons. It's time for family gatherings, to stretch imaginations, to get together or find some time alone. It's time for a Four Seasons sunroom. And right now, Four Seasons has special offers that let you have it all for less money than you thought. With no money down and no interest for 12 full months. Call Four Seasons and get your free quote and information today. Thanks for watching. Now call the number on your screen and mention the special code TIME and receive exclusive additional savings on your new sunroom. Four Seasons. It's time.
President Trump addresses the nation over the coronavirus, announcing steps to stem the outbreak.
We will be suspending all travel from Europe to the United States for the next 30 days. The new rules will go into effect Friday at midnight.
That speech appearing to disappoint investors, with U.S. markets facing another day of very steep losses. And the NBA suspending its season after one of its players tests positive for the virus. We have global team coverage of all the fast-moving developments as the second half of Worldwide Exchange starts right now.
This is CNBC Breaking News. Market sell-off.
Welcome back. I'm Courtney Reagan, live at the NASDAQ market site in Times Square. We begin this half hour with breaking news. Stock futures set to extend yesterday's sell-off, which officially marked the end of the Dow's 11-year bull run. Futures right now indicated sharply lower. The Dow Jones Industrial Average down by almost 1,200 points at 1187. The S&P 500 down by 136, and the NASDAQ down by 398. Now, the futures are trading at or near their limit downs, which means we could actually open much lower than is indicated right now by the futures contracts. For a better indication, let's take a look at two ETFs. These track the major averages. So the DXY IA and the SPY. These are not subject to pre-market limits like the futures and could, at these levels, give a better indication of where we will open. So that Dow ETF is down 5% at the moment, and the S&P 500 ETF, the SPY, is down almost 5% at 4.87%. Once the opening bell rings, here are the S&P 500 levels to watch today. If these numbers are breached, circuit breakers kick in, halting trading for a period of time. If the S&P 500 drops 7%, trading halts for 15 minutes. If it falls 13%, it halts for another 15 minutes. If it falls 20%, trading halts for the remainder of the day. So the level that we're going to watch for that first drop, that 15-minute trading halt, would be 7% if the S&P 500 hits 2549.48. The Dow yesterday lost more than 1,400 points. That was the second biggest point loss ever, ultimately closing in bear market territory, which means we are down more than 20% from the recent 52-week high. Let's take a look at what's going on in the Treasury market. We know this was an area sort of flashing these warning signs a bit before equities caught on. The 10-year yield is sitting above 0.7%, but just barely at 0.714%. The 30-year is above 1% at 1.224, but still historically very, very low. And oil prices, those are falling again this morning. Crude oil above $31 a barrel at 31.20, down more than 5% though. Down 5.4%. Red arrows overnight in Asia as the sell-off overseas continues. Australia also down by more than 7%. That officially in bear market territory. The Japanese Nikkei down by more than 4%. Hang Seng down 3.6%. The Shanghai Composite, the best of the bunch effectively, but still down 1.5%. European markets, when we get a check-in on early trade, are also deeply in the red. Look at France, down 6.4%. The FTSE 100 off by almost 6%, and the German Xetra is down by 6.6%. Let's give you a check again on the Dow futures. You can see the moment we took this sharp move lower right during the president's address last night. That was about 9 p.m. Eastern time when it began. The president calling on a travel ban between the U.S. and Europe to help stem the spread of the virus, also announcing a number of other measures to prevent the U.S. from falling into recession, but falling short of officially announcing new broad stimulus measures. Our own Eamon Javers was taking notes. He joins us now from Washington. Good morning, Eamon.
Yeah, good morning, Courtney. You're exactly right about the president. He addressed the nation last night at about 9 p.m. Eastern time. As you saw there on the chart, the president responding to the World Health Organization declaring this officially a pandemic now. The president announcing some new travel restrictions, but as you say, stopping short of more sweeping measures that he had been considering, including a national disaster declaration. Here's what the president said about the travel restrictions in terms of flyers coming in from Europe.
Keep new cases from entering our shores. We will be suspending all travel from Europe to the United States for the next 30 days. The new rules will go into effect Friday at midnight. These restrictions will be adjusted subject to conditions on the ground. These restrictions will also not apply to the United Kingdom.
The president also implied that travel restrictions in Asia could ease soon. Here's what he said on that front.
We are monitoring the situation in China and South Korea, and as their situation improves, we will reevaluate the restrictions and warnings that are currently in place for a possible early opening.
Now, Courtney, the president also said he wants help from the Small Business Administration to provide liquidity to businesses that start to struggle as a result of the virus. And this is a short, the president stopped short, as I say, of some of the sweeping measures that we had expected in terms of additional economic stimulus. This was not that major economic announcement, although the president did say he wants Congress to push forward on payroll tax relief for Americans. Not clear there's the appetite, though, Courtney, for that kind of relief up on Capitol Hill these days.
And that's exactly what I was going to ask you further, since he did sort of stop short of those measures, but look to Congress to explore it. Is that dead in the water? Is it a possibility we could see more of that?
Well, I think we're going to see Congress take some action as soon as today on their own package that's been moving forward simultaneously on Capitol Hill, and I think that will be broad and robust. But I don't think, as of right now, and this is a very fluid situation, but it does not appear that there is the appetite for the enormous payroll tax cut that the president's been talking about. What he's proposed here is 0% payroll taxes on both the employer and employee side through the end of the year. That's about $1 trillion tax cut through the end of the year for people who are on salaried payrolls, Courtney.
Wow, that's an awful lot of money, and this is a very fluid situation. Eamon Jabbers, thank you very much for starting your day here with us.
You bet.
Hotel stocks, airline stocks continuing to sell off in the wake of the president's speech restricting travel. We're going to get back to the markets here broadly. The Dow did end its historic 11-year bull run officially yesterday because the index fell more than 1,400 points, or 5.9%, leaving it 20.3% below its record close that was just on February 12th. So this is the fastest move into a bear market, 19 trading days, since the Great Depression in 1931. The S&P would have to close at or below 2708.92. The S&P and the NASDAQ both hit a record close on February 19th. Let's get a check-in on futures, where we are set to hit those levels at the open. Here, the Dow Jones Industrial Average again indicated lower to the tune of 1,191. S&P 500 lower by 136, and the NASDAQ off by 400. But again, we are testing these limit down for the futures contracts, which are also limiting how far they can fall, effectively why we call it what we do. Let's bring in Jeff Kilberg. He's founder and CEO of KKM Financial and also a CNBC contributor. Jeff, this is another sort of fearful morning, probably for many investors to wake up and to see just another sell-off. Do you think that this is an appropriate reaction by the market to really the unknown, the uncertainty of the continued spread of the virus and the economic impact therein, or are we going too far?
Well, Courtney, I think we are overextended, but this certainly is a knee-jerk reaction in the wake of President Trump's travel ban. What did that travel ban, what did that speech do to all the sentiment here in the United States? It really solidified some of the fears that the economy is going to get a pause button pressed on it. So here we are right now. We're not quite down at that 7% limit down, or that circuit breaker here in the E-mini S&P 500 futures behind me, but we will see a significant downdraft. We're closer to 2,600 versus the 2,700 you talked about, which is significant of that 20% bear market. But the velocity of this move, it's breathtaking. I do think, though, there's opportunity. We're going to see a robust fiscal stimulus offering. I think next Wednesday, March 18th, the Federal Reserve, most likely some of the rumors going around here is that they're going to cut about 75 basis points, not the anticipated 50 basis points. So in all this turmoil, I think there's opportunity, because the time to buy stocks, Courtney, is when the VIX is at 60, not when the VIX is at 16.
Wow, so you think there's opportunity here, Jeff. If you have a strong enough stomach, what would you advise investors do here?
I think you have to buy what you know. You have to buy what you use. Look at some of the names. Look at Boeing, for example. If we could strip out the 737 MAX conversation, Boeing's at $189. Look at ExxonMobil in the low 40s. There's some of these names that we really like, but we're sticking with tech. If you're utilizing XLK or potentially IGM, that's another broad swath technology ETF. But look, drill down on names like Microsoft and Apple. Microsoft and Apple are the only two really big, giant tech names that are still above their 2-day moving average. They're still revealing support and strength. So I think you have to stick to your game plan. It's very easy to get spooked and scared. And right now, I think this is an opportunity you have to embrace. These are short-lived. You don't typically see the VIX, the fear gauge, go above 60 and be sustainable above 60. This is not a crisis. Fundamentally, this economy is strong. So I think you have to embrace this opportunity, and we will see a lot of change in sentiment in the next 72 hours. Washington, D.C., tick-tock, tick-tock. You better come and bring your A-game, because right now this is really important. These next couple days, we can't go into the weekend with some type of additional fear.
There's a lot of fear out there, though, I do believe, Jeff, especially as the WHO now officially calls this a pandemic. Jeff Kilberg, thank you so much for joining us here this morning. Well, coming up, the latest on the growing coronavirus outbreak as the cruise industry takes new steps to combat the virus spread. But first, let's get a big check on the biggest Dow loser pre-market. Boeing, as Jeff mentioned, down more than 9%. Nike up 7% in the early going. World Exchange will be back in just a moment. But first, let's get a big check on the biggest Dow loser pre-market. Boeing, as Jeff mentioned, down more than 9%. Nike up 7% in the early going. World Exchange will be back in just a moment. But first, let's get a big check on the biggest Dow loser pre-market. indicated right now in the futures market. And this all comes after President Trump last night announced a ban on travel to the United States from Europe in an attempt to curb the coronavirus outbreak here in the United States. Frank Holland is back at CNBC headquarters with the latest. Hi again, Frank.
Good morning again, Courtney. The cruise industry is also looking to implement new restrictions amid this outbreak. Cruise officials have submitted a proposal to the Trump administration to impose banning travelers over the age of 70. Under that proposal, people over 70 would be banned unless they can provide written consent from a doctor. Anyone with chronic medical conditions would also be banned. Twitter, meanwhile, has announced it's requiring employees to work from home during this outbreak. The announcement for its 4,900 workers follows similar moves by Google and Amazon. And Amazon also saying that any worker impacted by coronavirus will be eligible for up to 2 weeks of paid sick leave. Amazon also set up a relief fund for its delivery partners, drivers, and others affected. And actor Tom Hanks and his wife, Rita Wilson, have both tested positive for coronavirus. Hanks announced on Twitter he and Wilson were tested in Australia, where he's working on a movie. Hanks says the couple will be, quote, tested, observed, and isolated for as long as required. Courtney, back over to you.
Serious stuff, Frank Holland. Thank you very much.
Thank you.
Well, speaking of postponements, we're following the NBA's decision to halt its season after one of its players tested positive for the coronavirus. Our own Eric Chemi joins us now. Eric, what are you hearing over what went into making this decision?
Courtney, that's right. So Rudy Gobert, he is a player for the Utah Jazz. He tested positive for COVID-19 yesterday. He was not in the arena. The Jazz were set to play the Oklahoma City Thunder in Oklahoma City. So he tested positive. He never made it to the arena. But if he had tested negative, he was set to play because he actually felt fine enough to play. So just before tip-off, they canceled the game. The referees left. I mean, the PA announcer basically said, everybody, just sit tight. We're trying to get confirmation if this game's going to start. That game never did start. And then the players waved to the fans that they were leaving. You can see some of that video right now. So everybody there was set to play. So once he tested positive, then the NBA had to determine next steps, because now you've got teams that are quarantined, and it was, okay, well, the Utah Jazz played all these other teams over the last several days. They practiced at different arenas around the country. Referees refereed their games, and now we're at other games. So because if they had to sit tight for 2 weeks, they figured, well, we might have to shut the whole league down indefinitely. So that's what made that decision happen. Courtney, back to you.
Wow, and I know obviously there have been some changes to March Madness. What about sort of other sports leagues, and any indication they're going to follow what the NBA is doing here?
So the PGA, they have a tournament starting today. They said that that tournament will go on, and if fans want to come, they can come. If they don't want to come, they can maybe figure out a refund. The NHL said they would have a statement today. March Madness is still going on without fans, and they're looking to play maybe in smaller venues now that they don't need these big stadiums. So every league is taking this day by day, and there'll be more information from the NBA today about what they do on the business side, because there are billions of dollars at stake here from multiple parties with the NBA.
An awful lot of money, and that is very interesting how that all went down last night with the fans already in the seats and the teams effectively set to play. Eric Chemi, thank you so much. Well, American suppliers are also feeling the economic brunt of the coronavirus outbreak. The National Association of Manufacturers conducting a survey of its member companies, finding more than a third say they're facing supply chain disruptions, and nearly 80% say uncertainty around the outbreak is likely to have a negative financial impact on their business. Joining me now to discuss is Jay Timmons. He's National Association of Manufacturers President and CEO. Jay, good morning. I guess, first of all, tell us about the survey and effectively when it was conducted, because I think that's important as well.
Yeah, it was conducted over the last week. It just closed earlier this week. And obviously, given the market conditions we're seeing, the news could be even more negative than we're reporting today. Manufacturers are looking for information, and what we've gotten back as part of that survey are questions from manufacturers about timely, concise, accurate information about what is happening obviously with the supply chain, but also what to do if an outbreak occurs or an infection is diagnosed in our facilities. What are we going to do at that point? Do we need to shut the facility? How do we clean the facility? And then lastly, what are the economic legislative and regulatory actions that we can take to make sure that employers and employees are made whole throughout this crisis, which is why we offered a legislative and regulatory package to the administration and Congress.
I was just going to say, you said they have a lot of questions about what to do if there is an infection or if they need to shut down operations. So do they have a plan?
Well, that's exactly what we're trying to establish. About 50%, only about half of manufacturers do have a plan for dealing with an outbreak in their facility. This is obviously novel, it's new, and I can assure you that manufacturers are trying very hard to figure out what that plan will be moving forward if they don't already have one in place. That said, any type of disruption like this is going to have serious consequences for the economy if it is as broad as some are predicting. So those numbers that you've reported, a third who are facing supply chain disruptions, which means their timing or their sourcing has been disrupted. Over 3/4, almost 80%, say that they expect a negative financial impact, and over half say that they anticipate a change in their operations, whether that is a change in how they're operating on the site or whether they have to actually close the site. All of those are very concerning to manufacturers and obviously to the economy as well.
And so if any of these manufacturers are watching, what advice would you give them? What would you tell them about what to do and how to proceed forward when there really are still so many unknowns?
That's right. So we have established a coronavirus task force at the National Association of Manufacturers. We are fielding questions right and left all day long on what current advice is coming out of the CDC, what legislative and regulatory solutions are on the table. We really appreciate, frankly, the bipartisan focus on this issue on Capitol Hill. We've offered a plan that would provide some liability protections for manufacturers of medical devices and masks, for instance. And the Democrats in the House are talking about putting that in a package, which we appreciate. We've also suggested that there be tax breaks for employers who are employing their employees during this crisis, even if they can't work. And we think that's important, as well as some relief of some of the tariffs. And the Senate Republicans are looking at that in their package. So we've got some good news on Capitol Hill from a bipartisan perspective, and we're hoping that continues.
We hope it continues as well. Jay Timmons, thank you very much for being here with us this morning and your advice to manufacturers. Well, on deck, we are breaking down how to navigate this latest market sell-off with our expert panel. Futures right now indicated lower for the Dow to the tune of 150 points. S&P 500 off by 117. The NASDAQ off by 358 points. That all equates to a downward drop of about 4% or more. And taking a look at several hotel operators under pressure this morning as the travel ban is further restricted by the president. You see Hilton Worldwide down 4%, Marriott International down by more than 7%, Intercontinental Hotels off by 7% as well. And a reminder, as the global markets continue to face volatility, you can always watch or listen to us live on the go on the CNBC app. Worldwide Exchange will be back in just a moment.
No one likes to feel stuck, boxed in, or held back, especially by something like your cloud. It's a problem, but the IBM Cloud is different. It's the most open and secure public cloud for business. It can manage all your apps and data anywhere, so it can help take on anything, from rebooking flights on the fly to restocking shelves on demand, without getting in your way.
Whether you've enjoyed the legendary terrain in Telluride, the unparalleled landscape of Park City, or the famed peaks of Whistler, you face the hassle of lugging your gear through the airport. With ShipSkis, you're just a few clicks away from having your skis, snowboard, and luggage shipped from your doorstep to your destination. With unrivaled pricing, real-time tracking, ShipSkis delivers hassle-free. Ship ahead and go catch those first tracks on fresh snow. ShipSkis, your skis delivered.
Plan to retire, plan to live. An annuity helps cover your essential monthly expenses, so you're free to live the life you want. Find out how an annuity can give you lifetime income at protectedincome.org.
Fun fact, 1 in 4 of us millennials have debt we might die with. And most of that debt is actually from credit cards. It's just not right. But with SoFi, you can get your credit cards right by consolidating your credit card debt into one monthly payment. You can get your interest rate right by locking in a fixed low rate today. And you can get your money right with SoFi. Check your rate in 2 minutes or less. Get a no-fee personal loan up to $100K.
Welcome back. A quick look at futures. We are indicated lower on the Dow by about 1,050 points. S&P 500 off by 115, and the Nasdaq off by 353 points. This after yesterday's steep losses, with the Dow falling another 1,400 points. That puts the index now down more than 20% from its recent highs, ending a historic 11-year bull run and making the fastest move into bear market territory after record highs, which, by the way, was just 19 trading days ago. Let's get a check-in on the ETFs that track the major averages. These do not have those limit downs in place. So right now, the Dow ETF is indicated lower by 4.3%. The S&P 500 ETF, the SPY, is indicated lower by a little bit more than 4%. Joining me now is Joel Kaluna. He's Wedbush Securities Head of Technology and Media Training. Joel, good morning to you. Obviously, let's start with a sort of broader market question. Where do you see things going today and frankly, the rest of the week? Is there any end in sight for you?
Hey, good morning. Thanks for having me. Yeah, I mean, unfortunately, I think it's too early to kind of call the bottom. And that's been the case now for about a week and a half. And there's a lot of falling knives out there. And I think people have to be careful to kind of dip right in. And the key is going to be, last night, you want to hear more, bipartisan tone from Trump. We didn't get that. And then obviously, if anyone had, Twitter up or even just their cell phone, the headlines just accelerate to the downside. And I think America's going to wake up a little bit and take this a little bit more seriously. Obviously, the NBA headlines, which you guys have touched on. Then Tom Hanks' headline hits the tape. And then you had Premiership kind of not playing in front of fans. So it feels like the economy is just right now the numbers are just going to kind of continue to go lower. And we really haven't seen the data yet. We started to see some numbers trickle out of China over the past week, and it's been pretty grim. And you got to think it's going to be like that here in North America as well. So I think it's too early to jump in. And what we're going to need to see as far as corona cases go, testing, kind of ramp up. And then see where numbers peak here in Europe and in the U.S. and then go from there. But it feels you're kind of guessing at this point, where the bottom is.
Paul Dietrich, Chief Investment Strategist for B. Riley Wealth Management, is also joining us. And Paul, at least from the notes that I see here from you, you might be a little less worried than what Joel is saying. But has anything changed since hearing what the president had to say last night for you?
No, I agree with Joel. Wall Street hates uncertainty. And that's what we're seeing now. And anyone who can tell you what the earnings impact of all this is going to be, they have no idea. The only good news is that we're seeing a cycle in China that this is playing out. The infections started late last year. The deaths started coming into the hospitals in early January. We saw a peak, and now in Wuhan, Hubei province, they had 8 new cases yesterday. That was the lowest they've had. Most of the manufacturing facilities went back to work 2 weeks ago in China outside of Hubei province. And this week, all the restaurants in Beijing and Shanghai were told to reopen. So we're seeing a cycle of infection, deaths, ramping up and peaking and then going down. We're seeing a similar cycle in South Korea, and I think we'll see the same thing. And it's going to be a 2 to 4 month period, and nobody knows what the earnings impact is going to be.
I'd like to give you both a chance to give us some actionable ideas here for investors. We just about have a minute and a half left. So, Paul, if you could quickly give us some of your ideas for investors, if indeed you think that there's an opportunity here, or if you think we should sit on the sidelines. Paul, go ahead.
Well, if you're still fully invested, as a lot of people were before the decline in the stock market, I would stay there, because in the history of these health crises, we always see 6 months later that the market's hitting new highs. If you have money, I think this is definitely a buying opportunity, especially for a lot of companies that have no exposure to China, are going to do well, with people staying at home. Now is the time to buy those companies that have been hit just as hard.
I want to give Joel a quick second here. Joel, what are your opportunities here, if any?
No, I love the video game stock. So Activision is kind of my top pick in the large cap group. It's a very clean story. Earnings are going to grow in 2020, and they have a very strong pipeline beyond this year as well, which will kind of support the multiple. And they've had some recent launches as well. And then on the short side, I think the semiconductors are still most at risk. Numbers need to go down. You know, the stocks was up 60% last year. So anything tied to handsets, auto, and industrials, I'd avoid.
Paul Dietrich, Joel Kaluna, thank you both for joining us here. That is it for Worldwide Exchange this morning. The hour flew by. Squawk Box is going to pick up the coverage of today's global market sell-off right after this.
Do you worry about going to the dentist? Well, relax. The Carefree Dental Card is now available in your area. Call the number on your screen and we'll send your actual card at no cost today. With the Carefree Dental Card, you go to the dentist whenever you need and you instantly pay a lot less. The Carefree Dental Card is just $15.95 a month. So call now and make going to the dentist carefree.
Call 1-800-478-0809 to receive your free Carefree Dental Card information kit.
We are the dreamers.
We changed the world.
Because we don't give up.
IU can help you live your dream.
IU is an online college, so your campus is wherever you want it to be.
Take classes when you want to take classes.
You receive the tools you need at no extra cost.
Even a brand new laptop and tablet to use in school. Call IU, then tell them your dream.
1-800-967-1179. 1-800-967-1179.
On the next Squawk Box, coronavirus impact, economic fallout, where investors are finding safe havens from the market's wild swings. Squawk Box, 6 a.m. Eastern today. Watch or listen live on the CNBC app.
CNBC Select rounded up the best exclusive limited-time credit card bonus offers and promotions. The clock's ticking. Head over to cnbc.com/select before it's too late.
The virus pandemic, the market sell-off. How can you position your portfolio for protection? Squawk on the Street, 9 a.m. Eastern on CNBC. Watch or listen live on the CNBC app.
Breaking news, futures are plunging, stocks set to drop further into bear territory after President Trump announced emergency measures to combat the coronavirus pandemic.
Shockwaves in the sports world. The NBA is suspending its season until further notice after a player tested positive, and the NCAA will hold its tournament without fans.
And actor Tom Hanks revealing he and his wife Rita Wilson have been diagnosed with the coronavirus in Australia. It's Thursday, March 12th, 2020. Squawk Box begins right now.
Good morning, everybody. Welcome to Squawk Box here on CNBC. I'm Becky Quick, coming to you from CNBC headquarters in Englewood Cliffs, New Jersey. Joe Kernan and Andrew Ross Sorkin are at the NASDAQ market site in Times Square. We're split up today, coming to you from separate locations because of coronavirus. We're doing this out of an abundance of caution, trying to make sure for the safety of our employees and everyone they come in contact with. This is what we're going to be looking like for a while. But it's not going to change what we do every day, which is bringing you the news you need to navigate these volatile markets. Obviously, a big part of this would be to make sure we can continue to do that, even if one of our sites is contaminated. U.S. equity futures at this hour have been testing limit down. For reference, limit down for the futures is down by 5%. That's as far as they're allowed to trade down before the open. So the number to watch on our implied open board this morning is down 136 points for the S&P. We have touched those lows and bounced off of them, but you can see we're not far off with the S&P futures indicated down by about 124 points. Dow futures at this point are down by 4.74%. Limit down is 5%. The NASDAQ is down by 4.6%. After the opening bell, remember, there are other circuit breakers you need to be watching. Those levels on the S&P for today, if those circuit breakers are breached, would be kicking in with trading halting for a period of time. The number is down 7% to 25.49 on the S&P this morning. If that were to happen, you'd see a 15-minute halt after trading started. The next level is if the markets were actually to drop by 13%. Then you'd see another 15-minute halt in trading, and finally, the third level being down 20%. If any of this happens before 3:25 p.m., that would be a halt of trading for the day. We had not seen these circuit breakers tested since 1997 until just in the last week of trading. That's what we're watching so closely. And again, we are testing limit down with the futures this morning. If you take a look at the Treasury market and see what's been happening there, you'll see that right now the 10-year note is yielding 0.71%. So the Treasury market, guys, is holding steady, but the stock market is looking pretty wobbly.
Although we got back at a 0.8 or so yesterday, I was hoping we'd be
a little stronger, a little further up.
The yield, I was hoping that they would have sold off.
Well, I'll tell you, I talked to some folks in the hedge fund world yesterday who actually worried that there was dysfunction in that market yesterday.
In the 10-year.
In the 10-year, and that what looks like it was going better than it should have been going is actually maybe there could be problems. So
Why, Andrew?
Unclear, but there were a number of notes going around late last night, conference calls about what felt like some liquidity issues in that market, and
which we haven't had.
I dare to speak about that.
We haven't really had those,
but there are people out there with either real concerns or at least speculation about that. So I think we got to keep our eyes on the 10-year, of course, but. In terms of what it's indicating, it may not be indicating what we think.
Well, we'll talk more about where we are, what's likely. I did take a quick look at December of 2018 just to get in my head the possibilities of where this can go. Larian's been talking 20 to 30. We're at about 22, 23 right now.
Right.
We closed on the Dow at 23.5. I think in December of 2018 we were below 22,000. So as scary as December of 2018 was, we still haven't even what didn't come close to the backdrop, the general news backdrop we're having right now. There's recession fears. So
right. I don't remember feeling the markets kind of having this kind of panic since the financial crisis. This is very different.
There's more general health and lifestyle and economic panic than, the market is reflecting a lot of angst, obviously down 22, 23% in the quickest time ever. But you wonder at some point, the human toll in the worst case scenario is scary. You listen to Merkel, you listen to what we're talking about here, but is how the duration of it probably allows for the economy at that point to come back in 3 months, 4 months, 5 months, 6 months.
So I don't want to put as many. I'm not going to put the rose-colored glasses on.
These aren't rose-colored glasses. You don't need to panic. Panic is never a good thing.
I don't want people to panic.
Okay.
I just think, and I've been saying this for the past week, if not longer, that I think that there's an issue here that I'm not sure a lot of our viewers even fully appreciate. The number of people who even tweeted us who are in other parts of the country who don't, even with what's taken place overnight, with what the president said, with the decision on Europe, and I know you're going to get to all of that in a minute, but I'm not sure there's a full appreciation that this could go on for many months in all cities across this country in real ways, and I think that that's actually, look, to me, the only sliver of hope on this right now, in terms of being in this market right this minute, is whether there's an announcement, and we don't know when an announcement may or may not come, that somehow one of these drugs, and unlikely to be a vaccine, but a drug emerges that's going to be in production quickly. And there are good examples of this. The malaria drug that's being used in South Korea.
I don't think you're talking about the stock market now. You're talking about the extent of Andrew, why do you think that the smartest players in the stock market, the biggest money,
yes,
that that you're seeing things that they're not seeing,
have been out?
What do you mean?
Are out. They're not getting into this market.
They may not be getting in, but the market is reflecting the current thinking of the smartest money in the world, and it discounts what's going to happen in the future. You are making the case that you're seeing things that none of these other people have considered. I'm just saying that the market discounts. Do you think we're closer?
The market has been wrong every day for anybody who was the smartest person in the room a week ago is clearly not that smart today.
Hey.
So let's just call a spade
a week ago we're down probably
you're still not, like I said, you're still not even at December of 2018.
I'm not trying to.
Okay, so what are you saying? A 40% sell-off is what's coming, or a 30%? Because we're at 23. What exactly are you saying?
What I'm saying is I still think that from the highs, it's not unlikely that we could get to 30%.
Well, we said 20. I mean, Larry's been saying 20 to 30. We've talked about that possibility.
There's a note out from Bank of America talking about what you'd been talking about with the Treasury illiquidity, the market functioning. They say it's materially deteriorated and may require a large policy response from the U.S. Treasury or the Fed. They're just saying it's gotten shaky, the shakiest they've seen since the EU breakup concerns back in 2011 and the financial crisis in 2008. They say that's caused dealers to widen their bid-offer spreads and limited their ability to transfer risk. They say we should care about this because that does threaten the ability for certain actors to retain their U.S. Treasury positions and could result in large-scale position liquidation.
So there's the December of 18. You can see it on the chart right there. So we're just above that. And that doesn't include, we're probably close with today's futures act, but we don't. By the end of the day, we don't know where the Dow could be. Exactly. I mean, I wouldn't even venture a guess. If it's down 1,000 now, there's 3,000. There's zero. I wouldn't venture a guess as to where
we're going to open because the headlines can move so quickly on some of these situations.
Not just open, but by 4 o'clock. Right. Who knows where we'll be in the news? There's things happening. NBA, Tom Hanks. These things are happening so quickly.
But I think you have to. This goes back to what I've been trying to say about the terminal value. You have to decide that every major event is going to be canceled. The NBA is over. Right. As I said, the Garden will ultimately get closed. Theaters will get closed. This is not just New York. It'll be in San Francisco and Chicago. And that's what's going to happen.
That's going to happen pretty rapidly, though. You heard about
I would
Broadway.
Just put my money on the collective knowledge of everybody in the market and all the money rather than...
I wish you were right, except for the fact that the collective knowledge... We were having this conversation a week ago. Longer than that, and yet look at where we are.
Again, though, the headlines change so rapidly.
Of December of 2000.
Hearing things like the president's address last night. Right.
President Trump, panic is just keep your wits about you, and we'll see what happens.
I'm completely.
The world can only end once, and if it does end once, then there's nothing you can do about it anyway. Anyway, President Trump addressing the nation last night, introducing sweeping travel restrictions in an effort to stem the spread of the pandemic.
To keep new cases from entering our shores, we will be suspending all travel from Europe to the United States for the next 30 days. The new rules will go into effect Friday at midnight. These restrictions will be adjusted subject to conditions on the ground. There will be exemptions for Americans who have undergone appropriate screenings, and these prohibitions will not only apply to the tremendous amount of trade and cargo, but various other things as we get approval.
Eamon Jevers joins us now with more. Eamon, good morning.
Right after the speech that this travel restriction to Europe is not going to apply to trade and cargo after all. It's just going to apply to people traveling from Europe to the United States. They cleaned that one up right after the president's speech. The president not introducing the sort of sweeping economic stimulus that many were hoping for or looking for. So no mention last night in the speech of support for broad sectors of the economy or that sort of thing. The president did say, though, that he's going to be pushing forward for help on sick pay for workers who are impacted by the virus. Here's what he said.
To ensure that working Americans impacted by the virus can stay home without fear of financial hardship, I will soon be taking emergency action, which is unprecedented, to provide financial relief. This will be targeted for workers who are ill, quarantined, or caring for others due to coronavirus. I will be asking Congress to take legislative action to extend this relief.
So no specifics there from the president on exactly how that's going to work or what legislative action he wants. We'll push the White House for details on that this morning. Meanwhile, here's what else the president called for in his remarks last night. In addition to that travel ban that you're talking about, Joe, from Europe to the U.S., that's for the next 30 days. The president also advised nursing homes to suspend all medically unnecessary visits. And he said the Small Business Administration will provide capital and liquidity to businesses that have been impacted here. He said Treasury is going to defer tax payments without interest or penalties for certain individuals and businesses. So we're going to look for more specificity today from the Treasury Department about who is impacted by that and on what basis. And then finally, He's calling on Congress for that payroll tax relief that he's been talking about this week. The proposal from the president is to eliminate the payroll tax for the entire year on both the employer and employee side. That's about $1 trillion in tax revenue to the U.S. government. The president says he wants to eliminate. Advisors to the president are talking about eliminating that permanently, not just for this year. And, of course, those funds go to support Social Security and Medicare. They've suggested that they've got a way to make up the difference for Social Security and Medicare, but have not provided details on that. So we'll look for all of those details and specificity today from the White House as they continue to unveil their proposals throughout the week. Joe, back over to you.
All right, Eamon, thanks. The pandemic sending shockwaves through the sports world. Yesterday, first the NCAA announced it would hold March Madness without fans. Then the NBA suspended its season indefinitely after Utah Jazz player, one of the Jazz players, tested positive for the coronavirus. This was the scene at the Jazz Thunder game when last night's game was actually postponed.
The game tonight has been postponed. You're all safe. And take your time in leaving the arena tonight and do so in an orderly fashion. Thank you for coming out tonight.
And this is video of Dallas Mavericks owner Mark Cuban getting the news on the sidelines of a game and rushing to tell the bench to tell the team. And here's what he said afterward on the NBA's decision to suspend this season.
Nobody at the Dallas Mavericks is an expert on infectious diseases or their spread, and so this is not a situation where you fake it till you make it or try to sound or act important. The NBA has hired people with expertise in those areas, and they're working with people from the government and other expert areas, other people with expertise, and so we have to defer to them, and that's exactly what we'll do. And if the NBA, effectively, if one player, two players, whatever it is, already have it, we'll have to act accordingly, and I think the NBA made the right decision.
The NBA says it will use the hiatus to determine the next steps moving forward in regard to the coronavirus epidemic.
Meanwhile, the news was just coming and coming last night. Actor Tom Hanks and his wife Rita Wilson have tested positive for the coronavirus. They're in Australia for pre-production of a film about Elvis Presley. In a statement that Tom Hanks put on Twitter, he said that Rita and he had been a bit tired. They had some what felt like colds to them and some body aches. Rita had some chills that came and went, slight fevers too. They were tested for the coronavirus and found to be positive. Now they will be tested, observed, and isolated for as long as public health and safety requires. Both Hanks and Wilson are 63 years old. Their son, Colin Hanks, released a statement thanking fans and saying he's confident his parents will make a full recovery. But I do have to say, I think this made this real for a lot of people in a way that we've been talking about, but may have been not real or not real enough.
I think the double whammy between that and the NBA player who had been found positive too, the cancellation of NBA March Madness with no crowds there, all of those things probably hitting hard across the country.
For me, it was our old general counsel at NBC, Rick Cotton, the head of the transit. And I said, wow, I know Rick. I've seen him recently. And
he's the head of Port Authority now and had been visiting train stations and airports and trying to get a feel for what was going on. Now he and his wife both have coronavirus too and have tested positive.
Health minister of one of the MPs in Great Britain who met with meeting with Boris Johnson.
It's all coming here.
Let's realize, though, you heard the symptoms of these people, and they're both 63. Yeah. So it never to minimize what happens, but
I've seen two issues though.
I saw some mortality rates from South Korea too, right. and even it gets up when you're over 80. It's a very disturbing 5, 6, 7%, but below
Actually,
that,
I've seen statistics of 14.6% for over 80. I think it depends.
That wasn't the one in South Korea.
No, not in South Korea.
Yeah. I was going to say, first of all, the important part that I'm not sure people appreciate, and again, I'm not trying to panic people, but if you have it, you're by default a carrier, even if you're a very young person, or at least that's the view of medical experts at this moment.
The mortality rate for under 30 was actually 0 in South Korea.
Correct. However, mortality unto itself is not the only story here. You should go look and read some of the stories. There are stories, at least anecdotally, individual stories of people who are having different organ failure.
I saw the lung damage. That's when it moves to the lungs. It can be very sick, but that's usually with people that are over 80 and that do have underlying conditions.
However, there are also examples of people who are younger who are having problems, and so I think the idea of minimizing this...
No.
Well, trust me, I think it has been minized. It's been minimized virtually every day. It's been minimized by the President of the United States. It's been minimized. We may not have, but I'm not sure that the public fully appreciates the true damage of what this is going to be. Clear economic and potential health damage.
The statistics Joe's citing from South Korea are probably the right ones to watch because they've done such a great job of actually testing, so it brings in people who have milder symptoms with that. That is probably the model that we should be following too, is testing everybody so that you can accurately figure out who needs to be quarantined and who doesn't. Getting testing up and running, I would say, is of vital importance.
Right.
All right, let's get to Meg Terrell. She's got an update on the latest headlines about the pandemic. And Meg, what can you tell us this morning?
Well, good morning, Becky. Yesterday, as you've been saying, marked a true turning point for the coronavirus response, both in the U.S. and on the international stage. The World Health Organization calling COVID-19 a pandemic for the first time, saying it's not just the disease's spread and severity that's concerning, but also alarming levels of inaction by some countries to address it. This morning, case numbers worldwide surpassing 126,000 and 4,600 people have died. In Europe, as the U.S. ban on travel begins tomorrow, Italy is still the world's hardest hit country outside of China, with more than 12,000 cases and 800 deaths. It's ordered almost all non-essential businesses to close. France and Spain each reporting more than 2,200 cases, and Germany more than 2,000. In the UK, exempted from the travel ban, there are about 459 cases. In the U.S., cases are now surpassing 1,244 states. 37 people have died. Cities and states now making greater moves to try to slow the spread of the coronavirus. San Francisco banning gatherings of more than 1,000 people. Washington State of more than 250 people. Governor Jay Inslee asked what the penalties are for not abiding by the ban, saying this.
The penalties are you might be killing your granddad if you don't do it. And I'm serious about this.
Some very serious language there from Jay Inslee about the most vulnerable groups, guys.
On that front, in terms of testing, what's the latest that you can give us just in terms of how many we've tested, how rapidly we'll be rolling out those tests?
So we don't have a great national picture of how many we've tested. The CDC is reporting some of its own numbers, but that doesn't account for what we're getting from the academic labs and from the private companies. Now, Scott Gottlieb and AEI have been compiling data about the nation's capacity to test, and as of yesterday, it was about 16,000 people a day. But Gottlieb also pointed out that the CDC has changed regulations about how samples can be processed so that they can be combined for patients, potentially even doubling our capacity to test people. So that should help. The other problem we're hearing, though, is that even as testing capacity expands, it's spotty around the country. So not everywhere has as much as they need. And there was a hospital CEO on St. Joseph Health. They treated the first patient in the United States. They were saying the number one thing they need is testing. So it certainly is not up to where it needs to be.
Okay, we've got Scott Gottlieb on a little later today, and we can ask him for more details on that when it comes. Meg, thank you. Good to see you.
Me too.
Okay, meantime, all of this market turmoil, we are starting to hear worries about a race for cash as companies max out their credit lines. And join us right now on the Squawk Newsline is financials analyst Jeffrey Hart, principal at Piper Sandler. Also, Sarat Sethi, managing partner and portfolio manager at Douglas C. Lane and Associates, as well as a CNBC contributor. Sarat, I'll go straight to you. What are you hearing on this particular issue in terms of companies drawing down these lines?
I think this is kind of natural. They're getting ahead of just in case the capital markets freeze up, credit markets freeze up. So all the companies that have strong balance sheets are now tapping their lines or potentially looking to do it just in case for the next couple of weeks we do get into some type of financial dysfunction. And I think it's more of a precaution, especially for companies that might not be able to go reissue debt or just are looking to make sure they have enough cash working capital going down the road.
Hey, Jeff, you cover the banks. The bankers were in Washington at the White House with the president saying that they felt that the banks were well capitalized. What are you hearing?
Yeah, I mean, the banks are in as strong a position as we've seen them in maybe forever. The problem here is there's questions about, how rapidly does the coronavirus spread, the lethality of it, but the real issue becomes the reaction to it, and with things like travel bans coming into place, I mean, the economic impact is becoming hard to ignore and probably going to be deeper and longer than we thought. Who still knows if we're actually talking about a recession here, but certainly we're going to be talking about a big economic slowdown, and that's bad news for the banks, right? Because they are historically been kind of a proxy for the economy because they provide the financing that kind of lubricates the economy. So, I mean, that's on top of the interest rates, it just kind of piles on to that. At least from what I've been able to hear and see so far, I mean, sure, lines are being drawn down, but it doesn't seem like it's too much of a problem or too crazy yet. We're at least not hearing of freezing up in the liquid markets. So it seems like the markets are functioning pretty well at this point.
Jeff, did you hear anything about at least worries about dysfunction in the bond market? I've heard a number of calls that took place last night among some hedge funds. And then also, Becky was reading from a note from Bank of America this morning on this very issue.
I'm sorry, you're asking what I've heard there?
Yeah, have you heard anything about anxiety, about dysfunction in the bond market right now?
Yeah, but it's at least what I've been hearing is more the concern that it could happen. Right? It does. I haven't heard a whole lot of people seeing it, but it's more, hey, if this continues, will it happen? And kind of what do you do then?
Right, Surat, when you look at the market today, obviously there's going to be a lot of selling, or at least it looks that way at the moment. How do you even begin to analyze it?
So I look at it as a couple of different ways. If you don't need to sell, don't sell. I mean, this is a time that, it's scary out there. We don't know what's coming. Andrew, you kind of quantified or talked about what the next few weeks might look like. But on a fundamental basis right now, at least in our view, companies are not truly being valued on their long-term discounting of cash flow. This is a short-term reaction, which could be a couple months, could be a couple quarters. So if anything, if you are fully invested, stay invested. If you do have capital on the side, I think opportunities have been abound for a couple weeks, maybe even more so in the next couple weeks. But I think good companies, strong dividends, balance sheets, global companies, these are companies that you can start picking up at prices that we haven't seen for many, many years. And I think, confidence will come back. And over time, we've seen these things happen. It is hard to go into invest. I know this is not an easy time, but I think the opportunities are definitely there and are coming up even more.
Obviously, it's always hard to bottom tick this, but what are you looking for in terms of how far and long this stretches?
So it's 20% now. We hit 20% or maybe a little bit less in 2018. Given kind of what we just saw today and given the uncertainty coming up, I could say we get another 5 to 10% on this. Certain stocks could do much worse. Certain sectors could do better. But I think, look at high quality companies. Look at companies like the Disneys and the Lowe's of the world. These are companies that you want to kind of add to over time. Good balance sheet companies, even some of the well-capitalized banks. Look at the JP Morgans, Morgan Stanleys. There are some really good companies that are giving you 3 to 5% dividend yields. Probably get even higher if stocks come down. And some of this is non-fundamental. It is just going to be selling because ETFs are getting out of the market. Algorithms are coming at you. And I think, we've seen that in a couple of days. We saw that on Monday. We saw that last week. And these things are vicious and they're fast. But if you have capital on the side and you're comfortable for the long term, I'm talking 3 to 5 years or longer, opportunities are definitely abound.
Okay, Surat, we're going to see you in just a little bit. Jeff, thank you for joining us. We should say markets, or at least the futures, look like they're now flirting again with limit down. And we're going to keep our eyes on that, with the Dow looking like it would open down about 5%. We're about 5% across the board with everything.
All right, coming up, an update on progress for a vaccine for COVID-19. We're going to talk to the CEO of Emergent Biosolutions. That is next. And then at 6:30, we're going to hear from Mohamed El-Arian on the big market move. As we head to break, here's a look at Treasury yields. 10-year now under 0.7 again at 0.688. We'll be right back.
This is Laura. She's a can-do spirit with a brilliant idea.
Brilliant? I mean, that's a bit.
Brilliant, Laura. Own it. Think what it took.
That 3 million should be 5. Wait, the Brazil thing.
It's Paraguay, and that makes it 9.
9 billion? We don't have the people.
Absolutely right.
No pipeline.
Nope. Check the spreadsheet.
You know who knows? Tom. Tom's on a plane.
Tom no longer works here.
It was a great idea, but the real brilliance was in how she got everyone on the same page.
Easy. Smart sheet.
When everyone works as one, you achieve more. That's Smart Sheet.
Yes, the first word to any adventure. But when allergies and congestion strike, take Allegra D, a non-drowsy antihistamine plus a powerful decongestant. So you can always say yes to putting your true colors on display. Say yes to Allegra D.
What's important to you?
Saving for Ava's college.
Financial security.
Being able to retire.
On
our terms.
No matter what your goals are, our trusted advisors can help you reach them. Ameriprise Financial.
If stiff pants are a problem,
fix it with Duluth Flex Pens. Only at Duluth Trading.
At FrontPoint, we believe smart home security should have it all, and now it does. Introducing the all-new FrontPoint security system, the new standard in home security and automation. Simple enough to install yourself. Safe enough to set the alarm with your voice.
Alexa, tell FrontPoint to arm my security system.
And smart enough so you can control it all, right from your mobile phone. FrontPoint Smart Home Security. Safer, smarter, simpler. Visit frontpoint.com and get the free doorbell camera.
However you take your business card, make the most of it with more shapes, stocks, and finishes from Vistaprint. And now get free shipping on all business cards, any style, any quantity, with promo code VCNOW. Own the now with Vistaprint.
Treating others like we'd like to be treated has always been our guiding principle.
Interactive Brokers charges 2.59% for a $100,000 margin loan. Do you know how much your broker charges? Upwards from 7.82% at Fidelity or Schwab to as high as 8.5 to 8.75% at Ameritrade or E-Trade. Move your account to Interactive Brokers and save at least $5,200, or much more if you're trading big bucks.
CNBC Select rounded up the best exclusive limited-time credit card bonus offers and promotions. The clock's ticking. Head over to cnbc.com/select before it's too late.
The World Health Organization declared the outbreak now a global pandemic yesterday, as you know. Let's talk about the race to find a vaccine. Emergent Biosolutions has joined forces with Novavax to work on a vaccine. The $2.8 million life sciences company is also speeding up the development of a treatment for the novel coronavirus, with hopes of human testing as early as September. Here with more details, Bob Kramer, Emergent Biosolutions President and CEO. The one thing that is frustrating, I think, Bob, is that the science and the state of the art for where we are in genetic sequencing and all the things we do, I figured we could identify something quickly, but you still can't rush it without doing clinical trials for safety and efficacy and everything else. And we're told that at the earliest that it's at least maybe the next round of infections a year from now. Do you accept that as a given, or is it possible we could have something sooner?
Yeah, Joe, good morning. Thanks for being on your show here. I think a couple things. First of all, Emergent is working across several initiatives. First of all, as you correctly pointed out, we have partnered with Novavax to develop and bring to the market a vaccine to help protect against coronavirus. And secondly, we are using our own platform, which has been proven historically to be safe and effective in the development of very similar therapeutic treatments, such as those that protect against things like anthrax and botulism. So this technology platform, we think, is a fairly low risk and has a high probability of getting something to patients in the near term. Through this technology, we hope to be able to be in patients, as you suggested, later this summer. So I don't disagree with the fact that this is going to take some time, but this is precisely why we have chosen to get into this market and make these products available. We've been doing this for 22 years as a business. In fact, that's all we do is focus on public health threats. So this is something that we're committed to as an organization, passionate about, and very confident that we can bring something to the market quickly.
So, Bob, you said in patients by the end of the summer. What do you mean, in clinical trials or?
That's correct.
Okay.
That's right.
In clinical trials. Okay, so that I mean, until you get through those, all the way through phase 3, I think, you can't really use it widely, or could you use it for compassionate reasons off-label? Or I mean, is there any way to even get it? We're all wondering whether we can do this even more quickly than the end of the summer, since it's only March.
And that's clearly what we're looking at as well, Joe. The benefit of this particular platform technology, the hyperimmune technology using plasma, is that, again, it leverages decades worth of experience that we've had in utilizing this platform. So when I say that we're going to be in patients later this summer, we think we'll be able to essentially get into a phase 2 trial later this summer. And if proven safe and effective, which we have a high confidence that it will be proven, then I think there's a way working with FDA as well as with HHS to make that product available, whether it's through an emergency use authorization or some compassionate use facility or capability to be used in sick patients.
Hey, Bob, beyond your own work, in terms of looking at what else is out there right now, what are you optimistic about? Is there a timeline that you see in terms of not only vaccines, but drugs that can be used, obviously, to arrest this when, in fact, people do get it, especially for those that are older?
Yeah, so I'm encouraged that by the fact that there are a lot of companies in this space now, and it's really a testament to the private and public partnerships that have been formed over the recent years. Many companies are offering their technologies, and again,
I appreciate that, but just walk me through a timeline. Is there anything out there right now that you see that you say, you know what, actually, in South Korea, for example, there's that malaria drug that's working, or people seem to think it's working. Obviously, what Gilead's doing, there's a view that may be working. What that timeline looks like in your mind?
Well, I think the timeline that's been laid out by any number of public health officials suggests that for therapeutic products, they could be made available in a similar timeline as what I just described with our treatment option. Vaccines clearly are going to take more time, 12 to 18 months. So I don't think there's anything nearer term than those that can offer immediate help, unfortunately.
Okay. All right, Bob. Thank you. And we keep us updated. Appreciate it. Thanks.
Will do. Thank you.
All right, let's get back to the markets right now. The U.S. equity futures during the hour have been testing limit down. Right now, you're going to see the Dow futures are down by 1,172 points. S&P futures down by 131. That's just a few points away from down 5%. That is the limit down that they are allowed. You can see the NASDAQ down by 4.9%, the Dow down by 4.99%, the S&P down by 4.81%. We'll be watching this very closely as we get closer to the opening bell. After the opening bell, you have some other levels to start watching because the circuit breakers at that point, it's a decline of 7%. If you were to see the Dow down 7%, you'd see a halt in trading of 15 minutes. That's what we experienced earlier this week. What we have not seen is a halt in trading down 13%. If you saw the market drop by 13%, you'd see another 15-minute halt. And then if there was a drop of 20% before 325, before the last 35 minutes of trading, you would see the markets halt for the day. Joining us right now on the Squawk Newsline is Mohammed El-Ariad. And Mohammed, you've been telling us this entire time that you would not be buying yet. You thought we'd see a decline of 20 to 30%. Yesterday, we hit down 20%. We've gone a little further. Is this just the time to jump back in yet?
Not for most people, Becky. Certain professional investors are finding a lot of opportunities here, but not most people. Let me explain why. When I told you 20 to 30%, which is about 10 days ago, believe it or not, it's because I saw a flashing red on what I call economic sudden stops, activities coming to a halt immediately, and that's starting to spread through the global economy. I saw a flashing yellow light on the economics of fear, which means people overreacting, and then liquidity was a green light. As we've played this forward, as central banks haven't responded quickly to the functioning of markets, we now have red light on the economic sudden stop, red light on the economics of fear, and a flashing yellow light on market functioning. So that makes me fear, unfortunately, that we're going to go more towards the 30%, and at that point we've got to reassess. But what we're going to see is something we haven't seen for a very, very long time. which is the real economy overreacting. Not just finance, but the real economy.
Overreacting.
Yes, people are going to stop engaging in all sorts of economic activities. Businesses are going to shut down. And there's two reasons for that. One is the demonstration effects. And what Italy did, Becky, is going to create a potential precedent for others, not in terms of shutting the whole country down, but in terms of social distancing. Mm-hmm. So we're going to see that happening. And then, humans are humans. So you're going to see people overreacting for a while just because of safety and health.
I mean, that reminds us of 2001. It was a different fear factor at that point, but it was fear nonetheless that stopped people from shopping, from traveling, from wanting to go places.
That's right. But you could identify where the risk is, and you had a massive government response. Mm-hmm. Here, our hope, and all these dynamics can change quickly, but understand what they need to change is not stimulus. What they need to change is progress on us having confidence that we can contain the virus, and secondly, us having confidence that our immunity can go up. A vaccine does both of these things very quickly. So that is what's going to turn the economy around. In the meantime, I'm afraid that we're going to see the usual overshooting. I can't stress enough the importance of people looking at market functioning. On Tuesday, I warned about the credit market and the inflation market starting to come under stress. Yesterday, it was the treasury market. We are living in a system that overpromised liquidity. We've had a proliferation of ETFs on illiquid asset class. Look what happened to the emerging market ETF yesterday and the day before. So we are going to have to reset slowly a system that's over liquid.
Mohammed, can you break that down a little bit? What are the problems with ETFs? What are the problems you're seeing in the treasury markets? What causes them, and what could potentially fix them?
So what does an ETF signal to those buying it? It implicitly signals you can come in and out anytime you want at reasonable bid-offer prices. And it's a great invention. It works extremely well on liquid asset classes, on the S&P, on the Dow. But because there's been this enormous demand for yield, because people have ventured very far from where they normally operate, comforted by ample and predictable central bank liquidity, ETFs started getting offered on asset classes that were liquid for now, but are inherently illiquid. So people took on way too much liquidity risk. So when we have a change in the paradigm and people try to reposition, the system cannot absorb the risk involved. The system cannot provide the liquidity. So you get price gapping and you get contagion. If you can't sell what you want, you end up selling something else.
Should those ETFs not exist?
Oh, no, they should exist. They simply shouldn't be offered on illiquid asset classes.
Hey, Mohammed.
Hi.
How are you? Separately, I just wanted to get one thought from you, which is, as we've been talking about this for the past several weeks with you, one of the things you've said is don't buy the dips. And I'm never somebody who wants to talk really about selling, especially in a panic at all. But given that you've unfortunately been right thus far about how far the market would go down, how much farther do you still think it has to go? Has anything changed in your mind over the past 24 or 48 hours regarding at least your prediction that we would be 20 to 30% down? Because I do think, and not that, look, if you're a long-term investor and thinking 10 years out, you shouldn't be selling right now. But for those who are trying to understand when to get in or really what to do if it really is going to go down.
He said closer to 30 and then reevaluate. So are you going to 40 now, Mohammed?
That's what I want to understand.
Yeah.
First of all, I'm not going to 40.
Closer to 30 and then reevaluate.
Closer to 30 and then reevaluate because we're having market malfunction, which I didn't think we were going to get. Look, you guys, you know me. I'm a great believer. Tell people what you're thinking and let them decide. So when I came out and said, do not buy that dip, people who knew me said, oh my God, that is a very strong signal from him. When I went on Twitter the last couple of days, urging caution, telling people be careful out there, it is treacherous, okay? It's because I'm worried. Yes, I am worried. Having said that, in my mind, we have companies, not all companies, but we have companies with strong balance sheet, lots of cash, good business models, and good leadership. They are going to survive. Right. They are going to be bargains, right? They're going to be absolute bargains. So if you have them right now, don't go out and sell them. Don't panic. And there's a risk that what's happening in the marketplace, especially the price gapping we're seeing, causes people to panic. So no, we are going to come back. We are going to turn around, but it is going to be a difficult journey. Always make a difference between the journey and the destination, because most of us, unfortunately, get influenced by the journey and not just the destination.
Mohammed, the overreaction of the economy in terms of fear of the virus lasts. The duration, I think, that's what I'm trying to figure out. If it's 3 months, then I think, that's something that you can deal with. Is it only 3 months? Is it 6 months? How long does it last in terms of, because then you would see the good companies you're talking about would come back, and you could actually see a pretty sharp rebound in some of these things.
When it comes, it is going to be such a sharp rebound.
How long duration do you think?
That's a medical question.
Right.
Okay, that's why I pushed back so hard 6 weeks ago, and people said, "Oh, this is going to be a sharp V. We come down, but we go straight back up." I said, "Hell no! It's going to be a U that's going to feel like an L." Okay, this is not a V.
But then why do you say there's going to be a sharp, Mohammed? That's the piece of it that I can't understand, which is I still think there's an expectation in the marketplace that at some point there will be an announcement about a drug or something, which I'm so hopeful for, and that this is going to change the dynamic. If that comes 3 or 4 months from now, how much carnage and damage is going to happen along the way that's going to create a prolonged recession, and therefore, how do people think about valuations?
So I've written about this, and you've got to distinguish between the financial markets and the economy. The financial markets will react much faster. Let's start with the economy. We are going into a global recession. Okay, we are going into a global recession. After what's been happening the last 2 days, we are going to see a spread of economic sudden stops. And the trouble with economic sudden stops, and unless you've worked, which I have, on fragile and failed states, the Sudan of this world when I was young, okay, unless you've worked on those countries when I was at the IMF, you've never seen an economic sudden stop. So the trouble with economic sudden stop is it's not easy to restart an economy. You've got to get people to re-engage. You've got to coordinate the restart. So the economic damage is going to last. That's why I believe that we are going to get a global recession. Financial markets are going to react much faster. And we are putting so much liquidity in these markets that when the green light flashes, and it will flash at some point, okay, we are going to have such a snapback. So the financial markets are going to lead the real economy. The real economy is going to struggle to get back, but it will get back. And the key thing is to ask what the circuit breaker was. We had hoped that policies was going to be the circuit breaker. That was the hope over the weekend. That's not going to be the case unless we get a real explanation of all the stimulus measures.
I'm sorry, but Mohammed, whether we get a drug or not, that I don't know if that's really the key thing that would turn things around.
No, Joe. The key thing right now is we are going to overshoot on the way down on asset prices, and we're going to establish a bottom. That's what's going to happen in the asset market.
In asset prices, but it's in terms of the crisis itself. As it works itself through, we've got some idea of people recovering in South Korea or China, or flattening the mitigation rate. I don't know if we can do it here. Maybe you never know whether you're going to be more like Iran and Italy, or more like where it's handled. But do you think we'll know in 3 months whether we're going to 100 million people, which was bandied about, that's how it happens? Or I mean, we don't necessarily go. We don't know yet the path of this, and we're still at a little we're under 200,000 cases still. I know there's probably a lot more that haven't been diagnosed, but that's also a positive, because a lot of people, you don't even know they have it.
Yeah, but what has happened in the recent 48 hours? Italy, Boeing, Seattle, suddenly the market has been able to have a look at what the left tail looks like. Right. And the minute you can see what the left tail looks like, you're going to price the left tail. And then fear What fear does is gives the left tail a much higher probability than what it actually is. That's how behavioral science works.
And you think the fear can get even greater than it is today?
Oh, it's going to get greater.
Okay.
It's going to get greater. Okay, people are going to run to the shops. People are going to run to the shops. We're humans. Okay, people are going to run to the shops. So yeah, and then I turn on my TV and I see you guys social distancing. Becky is in New Jersey. You guys are in New York. Okay, I see company after company announcing all sorts of things. Ask Andrew and I had that discussion. Ask a CEO who has declared a travel ban. What does it take for you to lift that travel ban?
Yeah. Hey, Mohammed, just on me being in New Jersey and the guys being in New York, we're all at work. We all want to make sure that we're still here doing this, but we just want to make sure, out of an abundance of caution, that we can make sure we're in two locations in case anything, if there was any sort of quarantine in any way. Yeah.
And
it's just redundancy.
And every company is going to do that.
But everybody's company is doing it. And by the way, productivity, I hate to say it, with all of the people who are working from home in the sort of white collar service space, productivity is going to go down. I mean, the whole, over the past couple of days, things are starting to slow down just across the board. And that's the part that I'm just not sure is.
Well, that's the economic. But
so I've been saying this for a long time. It's the cascading economic storm. Things just slow down, and in some cases they slow down suddenly. You shut down the NBA season. Okay, who had that in their left case scenario? Very few people. So remember, the economics of sudden stop, the economics of fear, and market malfunction. These are the three things we should reevaluate on a high-frequency basis, because they're going to tell you what the real economy is going to do. Right. In terms of what the markets, just look at valuations. Look at the washing out of trades, because there's going to be opportunities, just not now.
Exactly. You look beyond the closing of the NBA to that back to the duration. The markets are going to look beyond that before we know it's time to look beyond that.
But we have to unwind this love affair we had with liquidity risk. Okay, we've underestimated liquidity risk. People have gone in places they shouldn't be, and now we're just going to have a reset.
Even if the Fed continues to cut rates, as most are anticipating.
Yeah, Becky, look, when it comes to cutting rates, it's pushing on a string. It doesn't mean that the Fed is ineffective. The Fed should be all over the functioning of markets. They should finally have a feel for market technicals. They have to get ahead of this, because if market malfunction spreads, then we are looking at something else completely. And my hope is we've learned enough to realize that. What we've had is a massive migration from the banking system in terms of risk to the non-banks. The banks are fine. It is the non-banks that took on too much liquidity risk. And now we're just going to have a reset. So hopefully the Fed and others are all over this, assessing minute by minute how markets are functioning and making sure that they can relieve pockets of illiquidity.
We should probably point out the S&P laggards that we're showing right now. Again, American Airlines at the top of this. It's the cruise lines and the airlines that are reacting, again, based on what we heard from President Trump yesterday about how we will be cutting the travel from Europe here to the United States. Clearly, that'll have an impact on many of these companies that are listed here as the S&P laggards. Mohammed, I want to thank you for your time, and we really appreciate it.
Thank you, Becky.
At the NBA shocking the sports world last night.
The game tonight has been postponed. You're all safe. And take your time in leaving the arena tonight and do so in an orderly fashion. Thank you for coming out tonight.
Yeah, that was the scene after the NBA postponed a game between the Jazz and Thunder. Shortly afterward, the league suspended its season indefinitely. Eric Chemi joins us now to talk about the impact of the hiatus. And just like everything else, we have no idea how long we're talking about.
Exactly, Joe. After Utah Jazz player Rudy Gobert tested positive for the coronavirus, the NBA decided to suspend its entire season indefinitely. The suspension puts at risk $9 billion in annual league revenue. Its national TV contract alone is worth $24 billion over 9 years. Star players tweeting their shock overnight, with both LeBron James and Steph Curry talking about what a tough 2020 it's been so far. while team owners and executives have slammed the league office to figure out procedural and big picture questions like health policies for players and staff, what to do with salaries, will there be make goods and refunds for ticket holders, sponsors, and local media partners. Dallas Mavericks owner Mark Cuban last night in visible shock when he got the news. It's a rapid shift from earlier this week when the league limited locker room access and kept media at a safe distance from players. Gobert himself visibly making fun of that development in what is now a cautionary tale. Other leagues are taking different steps. The PGA will hold its tournament starting today. March Madness is set to continue for now, but without fans. The NHL will have its own updated statement coming later today. For contrast, though, the Chinese Basketball Association is now restarting after its own 10-week hiatus, and they're demanding that players, including Americans, come back to their teams. Guys, back to you.
Eric, can you speak to the issue of insurance, which really is underneath all of this, and it's why so many events have tried to stay going and as long as humanly possible, not just about returning sponsor money, but returning media money, the insurance that the NBA has or doesn't have, and what the other leagues have or don't have?
So the contract that the players union has with the owners, there's actually a provision in there that if there are epidemics or acts of war, acts of God, all these crazy things that would prevent the NBA from housing its games, they could take back 1% of each player's salary for each game that they missed, because it's about 92 games if you average in preseason and postseason. So in a way, that's a form of insurance where they say, look, if we don't get paid, then you're not going to get paid. They don't have to do that. They don't have to take away that player money, but they have the option to do it if for some reason they can't make up those games. But a lot of insurance experts I talk to say most companies in general don't have insurance specifically for pandemics because that's a separate thing that you would need to buy. That's different from just you've got insurance for fire.
But your expectation is that the NBA will have to return the money from sponsors and from television networks?
So, for example, ticket holders are definitely going to get their money back. And then it depends, because a lot of the sponsorship and a lot of the TV money, they're done on a local basis. So you've got that national contract with ESPN and Turner, but then you've got international deals. As we've seen, we know there's a Chinese deal. We've got deals with every country. And then every single one of the 30 teams, they have their own local TV deal with an NBC Sports Network or a Fox Sports Network or that local affiliate. So they all have different contracts. And that's what makes this confusing, is because they could have signed totally different contracts, and they may not all have the same deal. Let's say the Knicks and the Lakers may have totally different deals, for example.
I'm trying to just understand the cascade actually on the media companies, which thus far have actually held up relatively well compared to some of the other companies out there, in part because there's a view that people are going to be working from home and they're going to be at home and they're going to be watching TV.
And that's why the owners, when they had their conference call yesterday, they were all pretty prepared to just, let's play the games without fans, because we know that's where our TV money is coming from. It's much more important than the gate revenue in tickets. Well, so that's what they wanted to do.
We just glossed right over the 10-week number. And once again, we're back to trying to figure out whether we can, as a society, implement the same type of draconian, stringent things that China did. But you're talking about 10 weeks, and they're coming back now. So, I mean, if we knew now that it was going to be 10 weeks for the NBA, I think a lot of us might sign on for that.
Well, the playoffs start in April, and they end in June. So all of a sudden, if you look 2 or 3 months out, you'd be basically near the end of the playoffs.
If the crisis passes in 10 weeks in general, and I don't know whether we can do what China did, and I'm not saying that we can, but that's a number that you see. And also, over in China, they have a very strong vested interest in economic activity, and you wonder whether they may be doing things too early. And so, we don't know whether this is the right time, whether it's totally safe at this point. But 10 weeks, that's not even 3 months. And that's what we've been talking about, the duration of this crisis, how long it lasts.
And that's why they're trying to figure out if we can get some of the season back, then maybe we don't give up that much money, and maybe we just end the season later, start next season later, versus if we actually have to cancel these games permanently.
All right,
they don't know. They said they'll find out more today.
It's totally not pertinent necessarily, but I'm a big March Madness fan. No fans, and that just seems like it takes away a lot of the home team advantage, and that's part of the why you watch is to see a team get on a roll that has a lot of if it's one of the playoffs is in a local area, that's going to be weird to watch.
Well, now they're going to move a lot of those arenas possibly because they think, well, we don't need to be in a football arena. We don't need 60,000 people to show up if no one is coming. We don't need that stadium. So that's another plan they have to figure out.
Very strange.
You're not going to be watching with your DraftKings.
Right. Yeah, exactly.
Thanks so much.
Right. No home team advantage.
I want to get to Dr. Devi on this because now a look at what it takes to fight this virus. Dr. Devi is an associate professor with NYU's Langone Health. It's good to see you. Thank you for joining us, trying to help us understand all of this. One of the things we've been talking about all morning is the timeline in terms of drugs that are out there, drugs that may or may not be working off-label or otherwise, and how you're thinking about it.
Well, I think things may get worse before they get better. Just the focus has shifted towards slowing the spread of the viral illness. So the idea here is that if we have a ton of people coming in to the hospital, that it might get overloaded. So whether it's social distancing or the travel ban, the idea is to kind of spread out those people coming to the hospital and then get more data points to develop drugs that are more effective, to potentially develop a vaccine, and maybe to get better testing kits. The idea there would be, ideally, we would have something that's closer to, let's say, a home pregnancy test where people can maybe test themselves, have a high accuracy, and then avoid flooding the ER.
What does the timeline look for all of this, though? Because I think today investors, the public, are all trying to understand how long this is going to be going on for. Joe just asked the question of whether, if the Chinese Basketball League is back in business after 10 weeks, could the NBA be back in business after 10 weeks?
It's possible, but it's hard to say. I mean, one thing that can happen naturally, even without drugs, is that people develop a herd immunity. So the more people that get exposed to it, ironically, the more likely that they're going to be immune for a period of time. After that, we see this all the time, like, for example, with chickenpox, that virus. So as we have people who have that, they will actually protect others from acquiring the virus themselves. So we might see that. In terms of drugs and development...
That's the first time I've heard that, given the conversation about social distancing. What you're suggesting is something very different.
Well, not at this point, but yeah, as people, let's say, for example, in China, if we look at past viruses as well, as more people get exposed, then they have some protection. So,
but doctor, we're talking a long time from now, right?
Yeah, I mean, not right now for that. Yeah.
Do you think, doctor, do you believe that the public right now, and I will say up front, I don't think the public, quote unquote, gets it, or at least broadly gets it enough yet. But do you think the public does, given the warnings that are now being made by the CDC and to some degree by the president, though clearly I would suggest not enough, and it has come quite not fast enough either?
Well, I think there are two issues. So some things I think people get, like I see more people washing their hands. I see more episodes of social distancing. I think people are working from home. They are more cautious. So all of those things seem very positive. But on the other hand, we're seeing a lot of other things, like people are getting very panicked. And so you have people who are very low risk flooding the ERs, for example, to get tested. So that's an issue. We're hearing about people stealing, let's say, hand sanitizer, face masks, all of these things from doctors' offices and hospitals, which then creates more fear and panic and lawlessness. And if we look at other countries, like, for example, our neighbors in Italy, there are problems. So areas like prisons, jails, these are places, I mean, nursing homes and cruise ships, we've already seen that. But the homeless, these are places where there have been viral outbreaks in the past, and they're very vulnerable to that. So if we look at what happened in Italy, the prisoners, for example, because of restrictions, they actually overtook some of the prisons with the prison riots. And then you see deaths not directly related to coronavirus, but because of the violence in the prisons and then because of methadone overdoses. We've seen prisoners kind of attacking the infirmaries. In China, you're seeing a higher rate of domestic violence from the quarantine during that period. So I think, people, as there's more fear, some people take safer precautions. Right. Some people, on the other hand, react. And you see other issues.
But let me ask you this. There's a report out literally just 8 minutes ago. A passenger on a JetBlue flight to Palm Beach that originated in New York City has now been positively diagnosed with coronavirus. If you were on that plane, for example, what are you supposed to be doing? Is everyone on the plane supposed to self-quarantine? There was an usher at a play on Broadway that has now been diagnosed. You have to imagine the usher touched tickets, perhaps touched playbills and the like.
Phones. Checking your tickets on your phone.
Exactly, but are people supposed to be self-quarantining after learning this? I mean, I think that's what the public is trying to understand right now.
I agree. I think there's confusion because we're not getting a clear answer from the federal government, let's say. So generally speaking, from the studies, the idea is that these things can stay on surfaces perhaps maybe around 9 hours, but it doesn't seem to be so contagious that anybody who touches the same surface gets it. That doesn't seem to be the primary method of spread.
We got to go, but what are you recommending? If you were on that plane, what are you recommending right now, Doctor?
Well, I would say to be cautious and perhaps self-quarantine until you can be tested. I think that's the safest way.
Okay, but you do have to be tested. Doctor, we appreciate your time and your perspective this morning. It is 7 o'clock on the East Coast this morning, and I'm Andrew Ross Sorkin, along with Joe Kernan at the NASDAQ market site in Times Square. Becky Quick is at CNBC's headquarters in Englewood Cliffs, New Jersey. We are deploying our teams to alternate locations this morning, and for at least the immediate future, out of an abundance of caution for the safety of all employees and everyone they come in contact with. This is what we're going to be looking like for a while, but it won't change what we do every day to try to bring you the news that you need to navigate these volatile markets. The whole idea is that, in fact, if somebody were to have some exposure and need to ultimately self-quarantine, that we could go on with the show, as they say.
Show must go on.
That's what we're going to do right now. U.S. equity futures at this hour are flirting with limit down across the board, close to 5% down. Here are the levels to watch today on the S&P. If the S&P hits 2,549 or down 191 points, circuit breakers will kick in, halting trading for 15 minutes.
President Trump suspending travel from Europe to the United States for 30 days as part of the response to stem the coronavirus. And Eamon Javers joins us now with more. I don't think we all knew that. We were looking for payroll tax cuts and the like, I think, Eamon. That was kind of a surprise.
Yeah, that's right, Joe. And I can tell you that when the Wall Street CEOs were at the White House yesterday, they got a private medical briefing from Dr. Anthony Fauci and the virus response team at the White House. And Fauci told the Wall Street CEOs that he was very concerned about travel from Europe. And you could get a sense through the afternoon and evening that the White House was growing increasingly concerned about that. And the president did announce that travel ban from European countries does not apply to the UK. And although, as you point out, the president did not announce the sort of sweeping economic stimulus that many were looking for last night, he did say that he is going to be taking certain actions. Here's what he said.
Effective immediately, the SBA will begin providing economic loans in affected states and territories. To this end, I am asking Congress to increase funding for this program by an additional $50 billion. Using emergency authority, I will be instructing the Treasury Department to defer tax payments without interest or penalties for certain individuals and businesses negatively impacted. This action will provide more than $200 billion of additional liquidity to the economy.
So we're still looking for details from the White House on exactly who those tax deferrals will apply to and under what basis, and also who might be eligible for those Small Business Administration low-interest loans that the president is talking about there. So here's a roundup of what the president announced last night. He's advising nursing homes not to allow non-medical visits. He's, as we say, suspending all travel from Europe to the U.S. That's for 30 days. The Small Business Administration will kick in, as he said. The Treasury Department is deferring those tax payments without interest or penalties for certain individuals and businesses, and he calls on Congress for that payroll tax relief that he's been talking about. Guys, that is a $1 trillion tax cut. It would lower the payroll tax to zero on both the employer and employee side. There does not seem to be appetite for that on Capitol Hill. A lot of skepticism, including from some Trump allies like Chuck Grassley up on Capitol Hill. We'll see how Congress handles this. They're expected to move very quickly with a package of their own, and you can imagine that in the current climate, the president will sign it right away, guys.
Hey, Eamon, obviously the cases in Italy have been catching our attention, hearing more about other places in Europe too, but immediately I started thinking, are we going to ban travel from Seattle or from Westchester here in New York?
Yeah, that's one of the questions that the White House hasn't answered yet. I mean, we don't have any sense of domestic travel. The president called this last night a foreign virus. He placed blame on the European countries for not doing enough. He has in the past blamed the Chinese for letting this get out of control. The president views this as something external to the United States and has resisted any efforts to contain travel within the United States. And, you know, he was asked whether people should stop having conferences and conventions about a week ago, and he said, no, let them all travel inside the country. We don't have to stop travel outside. We can stop travel from outside the country, but we don't want to stop travel inside the country. The airlines have put pressure on the White House to not encourage people to stop traveling inside the United States. But at some point, that might become inevitable. We'll wait for some leadership from the White House on that.
I guess, has anybody talked to Fauci about that? If he's the one who's had concerns about travel from Europe, has he said anything about travel domestically?
I have not heard that, and I don't believe he told the Wall Street CEOs that yesterday.
Eamon, thank you very much. Good to see you. Some breaking market news this morning. Stock futures are set to extend yesterday's big sell-off, which officially marked the end of the Dow's 11-year bull run. You can see the futures this morning indicated down once again, with the Dow futures down by over 1,100 points. S&P futures down by 122, the NASDAQ off by 374. This is almost limit down in some of these situations. The Dow yesterday losing more than 1,400 points. That would be its second biggest point loss ever to close in bear market territory. We're now down more than 20% from the 52-week high that we hit just back on February 19th. Mike Santoli's here. He's got more on this right now. Hi, Mike.
Hi, Becky. Yeah, I mean, this market is really not respecting a lot of the typical restraints on the downside. Obviously, we've just kind of spilled lower in this information deficit. I did wanted to look at the 2-year of the S&P 500 ETF, though, to see how far back we've gone. And this, I would also say, the market is not really respecting various levels. Every day this week up to today, the S&P 500 essentially had a daily floor right at that minus 20% level from the high. That was a little bit too cute. It seems we're going to spill below that at the open. So 262 here. Again, it's not respecting levels, but people have been watching levels near here because, believe it or not, it is the 200-week moving average for the S&P. It's around 2630 or 2640. And it so happens that the December 2018 low, it finally did bottom at the 200-week average. Then I don't know that we can really pin much on this. We have a massive kind of information void that the market is trying to kind of rush lower to fill. It's selling first and asking questions later. So that does tell you, though, a lot of folks, including, of course, Jim Cramer, talking about these levels, not just the 200-week average. So that would be 2,400 or below. Maybe we can see that as a retest. Now, take a look at this. This is now the second-order effects, which are getting a lot of attention. It's the credit markets. These are ETFs tied to investment-grade corporate bonds and then senior loans, big corporate bank loans. And obviously went vertical to the downside in the last couple of days. This is now that illiquidity issue that Mohammed was talking about, and it's now going to, I think, be front and center because once you get the sense out there that you can't sell what you want to sell, you sell what you have to sell. And, without being alarmist about the actual creditworthiness of businesses just now, we just don't know what to make of it, and you're starting to see a little bit of capital markets seizing up in certain areas, guys.
All right, Mike, looking closely at all these things, let's talk to someone who knows markets and technical levels, everything else. VIX, JJ Kinahan, Chief Market Strategist at TD Ameritrade. Sarat Sethi is with us once again. JJ, your thoughts this morning?
Well, I think, Michael's talking about levels, et cetera. I think the biggest problem for most people as they look at this is that there's no end date. People like dates of things that are going to happen, et cetera. If you think about, if you draw the parallel to tariffs last year, there were days where we'd have big down days, et cetera, or big up days based on some news. And I think the biggest thing about that was there was always, well, if this doesn't happen by, like a July 1st or something, here are the consequences. The biggest problem for, I think most investors here is there is no date where you're saying, okay, well, we'll have an end or we'll have improvement by that. Everything's speculation. And I think with that, that's why it's making very, very difficult to price things. And so, the easiest thing to do when you're not sure what the pricing should be is to sell things, particularly on the back end of people having had, a few very nice years right now. So I think the biggest thing for, retail investors who are watching at home is to, if you want to, if trading in this market is fine, but really cut your size. And if you're going to use stop orders, et cetera, really spread them out. We are having giant ranges every single day. There's no reason to think that's going to stop in the near term.
Sarat, we spoke to you. We spoke to you earlier, so you don't have to have all new, insightful thoughts. You can summarize what you thought before and just add to that as well. Mike Santoli's here as well. But what do you think, Sarat?
I think what JJ's saying is this uncertainty is just causing this negative euphoria that we've had, in January and December where everything was going up and people were following it. I think the volatility is incredible. The ups and downs are a lot. And for the average investor, to try to time this is just not the right thing to do. So really, this is the time that we've talked about for years where you take that long-term perspective. And I don't know, trying to get that home to a lot of people to say, we go through these things and that's the equity risk premium you have, and trying to chase the bottom is very hard to do. So it's really investing at this point takes patience, and at some point the markets will reflect the reality that we have, and right now they're going to overshoot on the downside and really stay within your allocation. And if you do have the capital, add to it over time.
David Bahnsen, founder and CIO at the Bahnsen Group, joins us on the phone. So just talking in strict numbers, David, and they're frightening numbers, obviously, but I don't know, a worst case scenario, there were people that said the market needed to go down 40%. So if we're down 22 already, are we, by definition, closer to a bottom than the top right now? I mean, that's another 18% would obviously be very, very painful. But what do you think the real range could be when it's all said and done, David? Even if and assuming it overshoots based on where it should be.
Yeah, I mean, of course, the first part is defining what it should be, and that's really difficult to do. It will become easier with hindsight in the future, but I think that 40% would be really extreme for a non-financial crisis. If we have this sort of transitory period of impaired GDP growth, you could certainly see further downside. But regardless of the exact bandwidth, Joe, I'm convinced that we're closer to a bottom than a top. And I think that what the prior guest said is exactly correct, that unfortunately for regular investors, their best defensive play is to wait through it.
Right. Santoli, it's all about duration, I think. I mean, that's what we're talking about, isn't it? How long we have profits severely impacted. Some of these industries, you're talking about profits down like you've never seen before. But if it's 3 months, you don't even annualize the 3 months. So that's kind of what we need to get our arms around. And nobody knows at this point the epidemiology of the virus.
Market reflects people essentially surrendering to that lack of knowledge in the short term. Yes, I agree with you. If it's 3 months, the economy itself can make that up in large part, right, and not really be impaired that long. I think one of the issues the market is dealing with now is, as the clock ticks, we have companies structured that simply cannot weather 3 months of near no sales or something like that, and that's why you get the credit issues start to rise to the surface, and essentially that kind of treadmill keeps running even though you're not able to keep up with it on a top line side. So I do think that you have that issue right now people are having to try to figure out. On the other hand, I mentioned that the market hasn't been, obeying any particular levels or anything like that. It's just going to more extremes. But the fact is, we are at massive extremes when you look at just exactly how washed out the market has been. 5 days in the last week or two where you've had, 90-95% of all stocks to the downside. Whatever you want to look at to say, whenever we've had these massive panics or sell-offs or bear markets or whatever you want to call it in 08 and 2011, you had these preconditions for it's going to take further incremental bad news to really, in a straight line, get it down much from here, but that doesn't really help you on a day-to-day basis.
Mike, does it help to point out December of 2018? I just don't remember the specter of just the horrific visions we're all having of the future right now weren't present in December of 2018, and we still haven't hit those levels yet.
But isn't that concerning to you? See, I turn it around and look at it the opposite.
No, I take solace in that.
If you could go down to
what number? Define your number then. Define your number then. 40? We've admitted 40.
I'm just saying, if you could go down 20% on fears of a recession in 2018.
Right.
And we're here. And
I'm not convinced the backdrop is
worse.
I'm not convinced the backdrop is. You're talking about a 1% mortality rate, which is awful. It's 10 times the flu. That's what we're talking about.
I understand. That's the medical issue. The economic issue is a terminal.
The medical issue determines how long the economic issue lasts. And if it doesn't, if it's 10 weeks like it's in China, you're assuming it's not going to be 10 weeks.
I'm not assuming it's 10 weeks. That's
right.
Correct.
Okay. Fine. We know that. But you made that point.
We also have to understand two things, though. What happens during that 10? Let's say it is 10 weeks. How much business stops during that 10 weeks? That is something we also don't really know.
Everybody's watching the same things, and we understand
to me, the bigger concerning issue at this point would be if you're actually seeing trouble in the markets, the technical functions like Mohammed was talking about earlier, because that's the type of thing that just defies logic at that point. That's just the vicious cycle. And Mike, Sarat, I don't know if either of you have an answer on that.
But I think it's twofold here, Becky. I mean, you're right in the financial markets that have this uncertainty as to what's going on, which is kind of what Joe was referring to in December of 18. But then you have this consumer sentiment side, too, that we're talking about. It's a human element. It's a powerful 1-2 combination, and which is kind of that's what's really driving this market now. It's emotional at this point, where if it's 20, it could be 25 and 30. But, to Sansoli's point, this is now very technical. Like this could just blow through the bottom here, and you could have a huge blow up and come right back up. So I think we're trading right now really not on anything fundamental, but just sentiment.
But Becky, I do agree with you that just the financial market dislocations have now started to get to a point where we have to worry about not so much is the market going to function, but the gap's going to be bigger. Liquidity goes down.
Right.
And by the way, that's what people are saying. The Fed can actually come out and theoretically address those things on a functional basis in terms of these various programs. And this also is what we've tried to create some resilience in the system since 2008 and 2009. Now, the banking system, it seems like it has built up some cushion in terms of capital. But guess what? You build up the capital because you might have to burn it in the bad times, and that's what we could be looking at.
Here's the question, though. It would not be rate cuts that would do that. The Fed or Treasury could do something different. Maybe that would be even Treasury stepping in to buy Treasuries or something too.
Yeah.
And one thing I would say, guys, is looking at some of the places people, we talk about all this. What's confusing for people is where should I turn? What should I buy if I do participate in the market right now? One of the things we're seeing, I think that's interesting, is you're seeing people really turn to more, I'm going to call them almost old school stock that pay dividends, have weathered the storm before, so to speak. You're seeing people buying like Apple, Disney, Microsoft, names that may continue to go down, but I think people have more trust in. And so, someone made the point before that some of the, shall we call them more high flyer stocks, are certainly things people are saying right now, I don't necessarily want to be a part of at the moment. I want to go somewhere where I have longer term and they pay dividends. I also think is a big thing for stocks that people are looking at currently.
Hey, Santoli, the market's open for trading today. You know what I mean? People can act on whatever their intentions are. What are the incremental things that you mentioned that could be that we haven't already sort of thought about that could take us the next leg down, in your view? I mean, anybody's free to do whatever they want right now. If we know we're going 30 or 40, right?
No, I mean, you're absolutely right. I mean, I honestly don't know if there's a particular headline that's going to do it. I thought at some points this week, it seemed like we were sort of trying to stress test the market for the news blows that were coming. And it was, I think, a sort of a mixed outcome on that. But right now, this looks a little bit like a paler version, what we might see today, of that 2008 failed TARP vote, where it was like the market's going to throw a tantrum because there's some specific response it seems to want from policymakers. Hasn't gotten it yet. It's going to sell first. A lot of collateral damage is going to be created that is probably undeserving in terms of economic or long-term corporate value, but that's just the way it works because, you didn't start this from a point where the market was soberly and cheaply valued and was building in a margin of safety, so now you have to build that up through lower prices.
Just one quick point. We've been talking about duration. Scott Gottlieb, who's been coming on this program virtually every morning now for the past several weeks, says, just put this on Twitter, we face two alternatives but hard outlooks. One is that we follow a similar path to South Korea or one closer to Italy. Right. You're talking about the South Korea one. Right. He says, we probably lost the chance to have an outcome like South Korea. Right. We must do everything to avert the tragic suffering being borne by Italy.
The longer we've gone, the good outcomes keep getting left off the end. The bad outcomes don't. We just don't know what's going to happen.
We don't. But I think that we need to be a little bit more circumspect about the idea that this is going to somehow...
Well, there's still...
I'm hoping that we find the drug, as you know.
It's not going to be necessarily just a drug, but there's a difference between 100,000 or 200,000 global cases and 50 million in this country. There's a difference. And I don't know whether we're going to... If you think we're going to 50 million, that's something that would obviously have a much longer duration. I don't know. There's something in between those two outcomes. Becky, what were you going to say?
No, I just agree with you. It's something in the middle here. We don't know exactly what it is. It's hard to say what the market's factoring in, but it is the other sort of stress factors on the market that concern me at this point, because I think at that point you're not necessarily paying attention to logic or even the headlines at that point.
And something doesn't smell right about China. Either
that will be interesting to see in 2 weeks.
They're totally wrong, or they're so draconian, and the communists can do things in terms of personal liberty that we're unable to do here. But I just can't believe that where it started, we're still at less than 200,000 cases globally.
I agree,
and China has somehow gotten a handle.
They've released those draconian measures. Well, they've released the draconian measures. People are going back to work. We'll see in a couple of weeks if it picks up again, or if we're getting accurate reports, because that's been the other question. Have they been reporting accurately? Will we get those numbers? We'll be able to watch other factors that we've been watching all along, factory production, watching traffic and activity on the streets. But I do think that's a very fair point, Joe, and we'll see in a couple of weeks whether it's been effective.
We will.
Yeah.
Time will tell.
All right. Thank you guys for joining us to talk about trading. Let's give you some breaking news from the travel industry right now. Officials say that a JetBlue passenger on a flight that was traveling from New York to Florida last night has tested positive for coronavirus. That plane was stuck on the Palm Beach tarmac for about 3 hours because of a medical emergency. The local health department spoke to all passengers on the plane. Those passengers were allowed to leave the airport and were told to call the health department if they had any medical concerns. We have calls into JetBlue, and we'll bring you more as we have it. Unclear about what that means, if people would be self-quarantined, if they'd been asked to do that, but we will continue to follow this story. The full impact of the coronavirus is yet to be determined, but one industry may be prepared to weather the storm, and that would be the insurance business. For more on the risks, we're joined right now by Eric Donalo. He's Executive Vice President and Chief Legal Counsel at the Guardian Life Insurance Company of America. Also, of course, the former Superintendent of Insurance for New York State. And Eric, it's great to see you. Thanks for joining us.
Thank you. And also, I've recently rejoined the law firm of Debevoise and Plimpton.
Of course.
Good to see you.
Right. Good to see you, too. Eric, let's talk a little bit about how the insurance industry is prepared on two fronts. First of all, what kind of liability do they have for any of these canceled events, other issues that are taking place? And then how are they prepared with their own investments? Because when you see these huge moves in the Treasury markets, obviously that concerns us about pension funds, insurance companies, and others. So let's start with the risk at this point. What's the situation look like?
So I just think compared to 10 years ago, insurance companies are in a fundamentally better place. They're much more diversified. They're much more liquid. They have the highest order of risk management in place, and I think that their capital standards are even higher than they were 10 years ago. The regulators have insisted upon what's often called redundant reserving or excess reserves. So I think fundamentally, as an ability to make good on their liabilities, the insurance industry is in a very good place. These conditions are the exact conditions that they stress test for, they reserve to, and they work with the regulators on being able to make good on their obligations. But I would say that you could see insurers start to get more and more into fee-based businesses, get into more short-dated obligations. I would think that they're going to consistently think about getting rid of sort of core, non-core businesses for them in order to really focus on having as much capital for their obligations. On the asset side, so to speak, they have, in fact, I think, been increasing the quality of their assets. But I think in order to get a little more yield, you're going to see trends towards more real estate, CLOs, CFOs. I could see them partnering more with private equity to improve some of their capital positions. This is also a good time, in fact, for them to go to a market on debt offerings because they're very highly rated and they can bring in, $500 up to $1 billion and promise a fairly low interest rate on a horizon of 50, 60, 70 year repayment. Also, this is a time they are buy and hold companies. So I could see them going deep into the market and looking at compressed or challenged quality of assets and just loading them on. That's been a consistent theme in the last several years for insurance companies. So I'm actually very optimistic about their positions. There will be, as you say, there will be pressure, which we can talk about, from the inevitable claims around the virus, from the potential for business interruption on the property and casualty side. But I feel like the industry is well capitalized and prepared for that.
I guess my question would be, if they've already gotten a little riskier by trying to get more yield by going maybe more into stocks or something, if you're trying to get more liquid right now to potentially pay claims, it's a lousy time to try and be selling when you're already down 20%.
Yeah, but my point is that if you look at what they're permitted to invest in, like 90% of the pie is extremely conservative, high grade debt, bonds, et cetera. The regulators require the premiums to be in those kinds of instruments. I'm talking about getting like a marginally better yield, but really, really, really a huge number of the book. And it's also done under what's called statutory accounting. We've talked about this before, as opposed to GAAP accounting, which tends to be very, very heavily capitalized and very good about riding out short-term volatility against a long-dated match of liabilities and assets.
One thing that Mohamed El-Erian talked about with us earlier this morning is just how you are seeing markets that had been incredibly liquid, places that you wouldn't have seen liquidity in the past, but we've poured so much liquidity into the market, and now some of those places are actually drying up. Is that a concern for any of these things? Should I not worry about insurance companies there? Or, I mean, what you've said so far sounds very reassuring.
I'm not worried, because I think they've already put themselves in a very, very liquid position. You know, the other thing to take into account is while interest rates have dropped, quite a bit recently, there's been a downward trend now for a long time, and insurance companies have seen that. They've reacted to it. They are poised for a long time of lower interest rates. It's not as if it just fell off the table overnight from their perspective.
True. Eric, anything else you're noticing right now? Anything that concerns you just about the markets that we're watching, let's say, over the last 2 weeks?
Well, I think there's going to be some, debate, so to speak, among the regulators and the companies on a variety of things. You can already see the regulators reacting, sending out inquiries. New York State Department of Financial Services has something on its website now, asking the companies about their business continuity and readiness. Although I think, from having been inside of 3 companies so far, they are absolutely well placed for business continuity and be able to work remotely, et cetera. I think that the regulatory oversight has been helpful in that, again, the companies are very, very well capitalized. I do think that there'll be inevitable fear, which I just heard on the previous segment, about morbidity and mortality claims at the companies. But I want to emphasize that along with the capitalization that I think they've done really well on, they're also excellent risk managers. So they have factored in and stress tested for pandemic and epidemic for over 100 years since the Spanish flu. And I think that while people are appropriately very scared, they should be reassured that the industry is well placed both on the life insurance and the property and casualty side for these extreme events. That's why we have insurance. That's why people buy insurance, and that's what the industry is there for.
Eric, thank you very much. Eric Donalo, again, who's the former superintendent of insurance for New York State, with Deb Bevois in Plimpton. Appreciate it.
All right, Beck, thanks. Coming up, former Health and Human Services Secretary Kathleen Sebelius will join us to discuss the outbreak and the government's response. Squawk Box coming right back.
Time now for today's Aflac Trivia question. When was OPEC founded? The answer when CNBC Squawk Box continues.
Going upstairs and put down by Gafford.
The NBA is on TuneIn Premium. Each week, TuneIn picks an NBA game you just can't miss. Rising star Jason Tatum and the Boston Celtics are in Milwaukee to take on Giannis and the first-place Bucks.
Giannis, posting, poked at, spinning, fading, jump shot. Nailed it!
Today, the Celtics are in Milwaukee. Tip-off is at 8 p.m. Eastern. Search NBA to follow your favorite team today.
And we created the Veridesk to improve the way people work.